Good morning, everybody. Welcome back to another episode of the Market Open. It is Tuesday, March 25th, 8:46 a.m. Eastern Standard Time. We are 6 days left until we end out the month of March, and then we head into April, which again is crazy. I think this year is moving by so quick, but we're going to be 4 months into the year in about another week. So thank everybody for being here. We got a lot of stuff to talk about. We have tons of headlines from last night that are going to have some implications this morning. Obviously, yesterday was a massive day for tariffs in regards to the different things that happened with what Trump said. So we'll be recapping kind of what happened yesterday in terms of how it affected the broader macro in the context of the 10-year and the stock market. The stock market right now currently is very green still in the pre-market. Tessie, I think looks like wants to go for 300 today. I mean, will it happen? We'll find out, but it's up another 2% after being up 12% yesterday, 283.60 right now on Tesla. Rocket Lab's up 1%. Palantir's at 97.73. I mean, Tesla looks like it wants 300. Palantir looks like it wants 100. It's pretty damn incredible. The S&P 500's up another 0.3%. I don't think I'm used to this type of green. It feels like 2024. And I know it's only 2 days into it. And I know it's only the pre-markets. Robinhood is up another 1%. But still, momentum looks like it is on the side of equities. And there is a reason for that based on what happened yesterday with tariffs that we'll talk about and discuss, go more in depth. And we'll see ultimately how this plays out. So we got a nice little pre-market. And it's not too bad to see some of the green that we are looking at currently right now. We have Rumble earnings that we'll talk about. We have a couple of pieces of headlines from India, China, and a Palantir Germany update. We know that Palantir has had a pretty tough relationship in Germany in terms of trying to scale. So I found out a couple things last night that I think are going to make it more evident for why their ability to scale in Europe is becoming so hard. Unfortunately, it's not a brand new deal. It's actually a hurdle for them to get a new deal. So we'll talk more about that and see kind of how they are navigating this. Also, we are not doing Technical Tuesday today because I will be on a flight because I'm going to the Robinhood conference tomorrow, but Jason's going to join at 10 a.m. and we will have 1 hour of Technical Tuesday for the Market Open. So we will be able to get Jason later in the show, probably at 10 a.m. So 10 to 11, 7 to 8 Pacific. So he'll be up early. But yeah, we can't do market close, but he'll be on in a couple hours and we will have Technical Tuesday for the Market Open. So exciting stuff. A lot of stuff to talk about. Yes, no market close. I will be on a flight one day when Starlink is actually integrated with United. I'll do the Market Open or market close on the plane. But unfortunately, United does not have the right internet yet. So until that day, we're going to have to miss the market close for today. But tomorrow, we will have Market Open, market close, and we will have a lot of content from the Robinhood event. Super excited for it. And we're going to see if Robinhood can cook up some really good new products to get the market a lot more excited about their broader trajectory. So a lot of stuff to talk about. Thank you, everybody, for being here. Blake, what's up? Cody, Arnie, thank you for being here. Thomas, Troy, Andy, TJ, Katie, Samir, what's up? What's up? Good morning, everybody. Rodrigo, what's up? Dig says you should start mentioning the time zone since you have a global audience. Yes, I always forget to say Eastern, but then I realize you guys are all across the world. So whenever I'm speaking in time, it's always Eastern. If you can remember that, and then you can just do the time conversion. One day when I get really good at time conversions, I'm just going to be spitting out all the different, like 3 p.m. this, 5 p.m. this, 6 p.m. this, 2 p.m. this, but I suck at time conversions. I'm so bad at it. I know the UK is 6 hours ahead, right? Or behind. I might be wrong on that. All I know is California and New Jersey. That's East Coast, West Coast. That's literally it. Everything else is a blur. Darren, good morning. Jason, hi from Hong Kong. Jason, thank you for being here from Hong Kong. I love it. Dylan, what's up? Good morning. Tony, Lena, Justin, Bryant, what's up? Not going to lie, I would be mad if someone was live streaming the entire flight I was on. Dude, we got to do it one day. We got to do it one day. But United does not have the right internet yet. They keep saying they're partnered with Starlink. And every time I get on a United flight and I pay for the internet, it's like this crappy little barely working internet. So eventually we're going to have to stream and do what we got to do. Chad, good morning. Thank you for being here. Brandon, Marie, Peter, Sophia, Leduc, Arnie. UK is 6 hours for you now. Typically it's 5 and 6. Okay, that's what I thought. About 6 hours. David, Phil, Lang, Don, Kristen. Thank you, everybody, for being here today. All right, so let's get started. We got a lot of stuff to talk about in the context of the macro to get a better understanding of why we have this green, and then we'll get through all the headlines. First things first, let me just say this. I bought another Tesla. So you guys know the Tesla Model Ys are having these massive discounts. I posted this on Sunday. There are cars going for $35,000 in New Jersey, which is after the $9,500 tax credit, $2,000 in New Jersey, $7,500 federal, and then you had an $8,000 price adjustment on some of the inventory legacy Model Ys that are new vehicles, but they're not the Juniper versions that Tesla's getting rid of. So my dad has been wanting a Model Y for like the past couple months now. And he's like, he likes my Model Y. He's ready to upgrade. And so he's been waiting for the right price. Yesterday, all of them were sold out within 200 miles of where we live. And my dad was really upset. He was like, damn it, we should have just booked it on Sunday. The only one that was left had a white interior and he refused to have any interior other than black. It's something with Indian dads where they're like, they can't have a car with a white interior because they're like afraid of it getting dirty. Like he was so pissed off that I got a white interior. But I was just like, it's not that big of a deal. But like, he just wouldn't do it. And then a couple hours later, someone just messaged me that there was a Model Y available. Sometimes they just pop up. And so we got a new one, brand new Model Y, $8,000 discount, brand new performance, all-wheel drive, $35,000. This one's going to be for my dad, not for myself. So super excited to get it for him. And no one better blame me if the deliveries miss on April 2nd, because it's definitely not because of me. So now we have two Teslas in the house. This is what the car looks like. It's Quicksilver with a black interior. It has to be black interior because he wouldn't handle white. And we got a new Model Y. So I'm super excited for this. My dad's getting older. I think FSD is going to be something that helps him throughout the day when he's driving. He's already experienced it and he likes it. Learning how to drive a Tesla, it takes like less than a day to learn how to drive a Tesla. There's a little bit of a difference with the regenerative braking, but outside of that, driving a Tesla is not hard. So I think he's going to get used to it pretty quickly. And yeah, super excited for it. Did you buy it to support Elon or just the deal? So I'm happy to support Elon, but no, if there was not an $8,000 discount, I would not be buying this car. So the reason I bought it is because my dad wants a Tesla, which kind of goes to the point that we've been talking about. Like, is it a good car? Yes. Do you care about the politics? No. Like, my dad's actually upset at Elon because Elon's been like not even working at Tesla because he's been, at the White House and stuff. But my dad doesn't give a shit. He's like, he's not like, I'm going to stop myself from buying a Tesla because of how I personally feel about Elon. He really likes the car because he's had experiences in my car and he's enjoyed it so much. So happy to support Elon, but those $8,000 discounts are running out everywhere. I mean, if you just go to your Tesla local website and kind of see what the deliveries look like, there's barely any left. And on Sunday, they unleashed massive inventories with all these discounts. I don't know, dude. It kind of feels like deliveries are going to do well going into Q1. However, their margins are going to get cracked. And the reason the margins are going to get cracked is because they're losing thousands of dollars for these cars to get them off the shelves. But it looks like the top line delivery numbers might not be as bad as we expected. And maybe that can soften the blow, especially if the stock can hold these levels. I mean, if the stock is 280, 290 by the time we get into the Q1 print and there's a 20% decline, your max pain is around 220, 230, which would suck, but it's better than it being at 230 and then getting a 20% decline and then going below 200. So if there is a 20% Q1 chop coming based on deliveries and auto revenues and we hold these levels, maybe Tesla really doesn't fall all the way back down to what people were saying below 200. Simply because they're like really shipping out these cars and trying to hit their numbers for Q1. So yeah, it'll be cool to see kind of how this plays out, but it's just a lot of cars that are getting, I mean, there was at least, I would say 100 cars within 200 miles of my radius. Yesterday, there was 2 left and one of them had white interior. And then 2 hours later, finally, one of them with black interior popped up. And that's when I immediately booked it. So yeah, I think a lot of these are probably starting to get sold. Brett says, sounds like a normal person who buys a car, not because of the CEO's politics. Yeah, kind of a normal person who doesn't care that much about what a CEO says, but rather just looking at the car. But no, my dad's super happy. He's excited for it. I'm happy to buy it for him. This doesn't even begin to pay him back for what he's done for me in my life. But I finally convinced him. Indian dads have a lot of pride. They don't want their kids to pay for anything. So I finally convinced him to just let me buy it, let me handle it. So it's super cool. We're going to have 2 Teslas in the house. And yeah, he's going to be whipping the Tesla through the streets of New Jersey. So super excited. I will show you guys pictures and everything when the Tesla comes in, but probably next week it comes in. We got to deal with all the paperwork now. And then we should be good to go. When do you take delivery? Probably next week. I would do it this week, but now I'm traveling to California. So, I mean, most likely Monday or Tuesday we'll get it. And then we'll keep going from there. Okay, cool. So that's what we had in the context of Tesla. Now, in terms of some of the macro stuff, so why is the market green right now? Well, let's do a quick recap of what happened yesterday because it's a little bit of a four-part story. So first, Wall Street Journal last night said, or 2 nights ago, said that tariffs are going to be delayed across a variety of industries in regards to semis, automobiles, and pharmaceuticals. That was bullish. That's why the market went up. Then yesterday, Trump said, if you do any business with Venezuela, aka you buy oil and gas for them, you are going to have a 25% tariff put on you. Does that sound insane? Yes, because it is insane. It makes no sense. But Trump said, if you do any business with Venezuela in the context of oil and gas, you will have a 25% tariff. In my opinion, and I don't even think this is a conspiracy, I really think he was trying to create some more volatility by putting out this ridiculous, because this is absolutely ridiculous to even think that this makes any sense. And it didn't work. As soon as he said that, the market hit a new high of day yesterday. It ended up finishing much higher than 5,760. But the market was just like, we don't care. We're not believing this anymore. We're not like falling for this trap where we think like, yeah, like this massive tariff windfall is going to happen because you work with Venezuela, because the market just called BS on it. So that was the second thing that happened yesterday. The market ignored it. Then we had this come out yesterday. Trump said that he signed a rare earth deal with Ukraine, or that the deal is now official and that he will be signing it shortly. So that is relatively bullish to get closer to peace. And that was a catalyst that was good for the markets yesterday. And then Fed President Bostic came out. Now, this Fed president doesn't have a vote on the rate cut decisions anymore, but he said, I quote, "The Fed has to acknowledge that historically tariffs meant a one-time jump in prices. That may be questionable this time." Basically saying, hey, that tariff inflation that Jay Powell and Goolsbee said was transitory, yeah, it's not going to be that transitory. Now, this is one Fed president's opinion, but nonetheless, he is a Fed president and his opinion holds weight. And you had a small red candle yesterday. If you were watching the sticks, this was right around 2 p.m. when Bostic said this, because now the market was thinking, okay, do the Fed presidents know something that we don't know about tariffs and how inflationary they're going to be? And that's where you had a little bit of a hiccup yesterday towards the end of the day. And then finally, at 3:06 p.m., Trump said to reporters, I may give a lot of countries breaks on tariffs. So it's like, it was the Wall Street Journal said, okay, the tariffs are delayed. Then Trump comes out and says, actually, no, if you do business with Venezuela, you're going to get a ton of tariffs. Then Bostic comes out and says, yeah, I think the tariffs are going to be really inflationary. And then Trump ends out the day by saying, actually, I might give a ton of breaks to countries in the context of tariffs. I mean, the market has no freaking clue about how to interpret what the administration's tariff policy is. And as a result, 2 things have happened. Number one, they stopped caring about equities having a decline based on the headline around tariffs, which is why stocks hit a new high of day yesterday and are continuing to get some green in the pre-market, which is great for us. But number 2, and this is the part I'm a little scared about, the 10-year spiked. The 10-year now hitting the highest levels in the past couple months at 4.35. Yesterday went from 4.1 to 4.33. So I am very confused how the administration is planning to deal with this bond yield continuing to surge higher. I mean, you can make the argument people are selling bonds, which causes yields to go higher, to buy stocks because of how more risk on the market's getting. I mean, the fact that Tesla's damn near almost 300 is very risk on. You had Big Bear AI that was up 20% yesterday. I mean, when you're getting these types of moves in the market, bonds are not going to be the place to be. And people are not going to be so afraid of equities when there's this much risk on appetite to then go at safety in bonds. So how are yields going to come down? I mean, like, I don't understand it unless the administration is planning on something that we don't know about. But that is the confusing part about this entire rally, because theoretically, we're not supposed to have yields surge while the market surges, because that's just not what the administration has told us they care about. They don't care about the stock market. They've said this very explicitly. They care about a long-term view on the economy through a detox of getting rid of government spending that should hopefully get interest rates and mortgage rates down. That is a simple sentence to summarize this administration's perspective on the current state of the economy. They do not care about Tesla going to the moon. Like, they just don't. They don't care about the S&P 500 hitting new all-time highs. We care about that. They don't. So the fact that that's happening right now, to me, is a real rejection from the market in terms of how the Trump administration has been communicating to them about how, you know, this market is ultimately playing out. And one thing that's also really interesting about this is the reason I think there is an argument. I don't know if we bottomed, but the reason I think there is a hell of an argument for why we bottomed 2 weeks ago at 549 on the S&P. Yesterday, Trump said multiple things that you would think would stop the rally, and it didn't stop. And there was no fundamental reason for us to rally yesterday outside of the tariff news. Like there was not like, some massive thing that happened in the economy or mortgage applications surged by 50%. Like nothing like macro. There was no CPI, no PPI, nothing happened. I mean, we had PMI data that was relatively okay, but it wasn't like a game changer. So why is the market mooning? I think it's because they're recovering from those oversold territories. Some stocks, again, just didn't deserve to be where they were. Like SoFi didn't deserve to be at $10. And then number two, the market's rejecting this idea that they need to be scared of tariff volatility because they just don't believe in the tariff volatility anymore, which I think is quite amazing. But ultimately, we're going to see how the market ends up playing out. So, I mean, do we have a bottom? Let me ask this question right here in the chat. I mean, it's almost 2 days, really 3 days, because Friday started this rally green. The question remains the same. Do you think it's a dead cat bounce or do you trust it? Do you trust this green? We'll have Jason on to talk about the technicals in about an hour. So he'll give us his perspective on what he thinks this market is like. I know last Tuesday he felt a little bit more skeptical and that it could be a dead cat bounce, but we did recover the 200-day moving average. The 200-day moving average was at 573.8. We ended at 574.4 yesterday. We're at 574.6 right now. We got the 200-day back, and that's a big deal. That is very similar to November 2023, where we lost it for a week, and then we got it back, and then everyone knows what happened in 2024. I don't know if the same would happen this time, but even from a seasonally adjusted perspective, every chart around a post-election year shows a bottoming in mid-March. I mean, literally on the dot, March 15th, and then a rally into basically August until we top out, and then we fall in September, then we go back up in October, November, December. If it plays out the same way, then buying the dip over the past couple of weeks would have been a very, very strong thing to do. Did you finance the Tesla or paying cash? I am financing the Tesla. I am not paying in cash. So this one will be financed over like 4 or 5 years. But it's like an extra $550 a month. You know, it's like it's not really breaking the bank here. So that's why I am excited to buy it. And again, without this $8,000 discount, it gets closer to like, 49,000. So, I mean, this $8,000, this is the cheapest Model Y you could ever buy at 35 grand. Obviously it's more with like, if you choose to finance it, but I mean, who says Tesla doesn't sell a $30,000 car? I mean, here we go. We got a bunch of them. They're going to lose a lot of money on this, but here's the thing about Tesla. My dad's probably going to get FSD. So we're probably going to start paying $99 a month for that. And that's beautiful software margin, SaaS recurring revenue that Tesla gets, even if they're losing on the actual automotive revenues when we buy the car. So that's another thing where it's like, that's the beauty of what Tesla's able to do. And if more and more people end up getting FSD, then getting the miles to train FSD gets better and better, which means the robotaxi gets better. Like that's sort of the integrated ecosystem here, which is why Tesla ultimately gets the multiple off of their earnings versus other car companies that just never really get those multiples. 35K is after the federal discount, correct? 35K is after the discount with New Jersey has 2,000 and then the feds have 7,500. So $9,000 in New Jersey with the incentive and then another 8,000 off. It's like, dude, like you can't ask for a better deal. The only way this could be a way better deal is if they gave 0% APR, but they're not going to do that because they got to make some money. So I think if it's available in your location and you've been thinking a bit, this is one of the best deals or one of the best times at least to get a Tesla. So that's what we had in the context of tariffs. If anyone's confused why the markets are green, everything I talked about for the past 10 minutes or why the markets are green, essentially you can sum it up as they don't care anymore, at least for now. Maybe Trump says something so crazy that they start caring tomorrow, or maybe they start caring today, but they don't care anymore about tariffs. And Trump with the ridiculous Venezuela tweet yesterday, I mean, it was just the most absurd thing I've ever seen. That wasn't enough to get the markets to be scared because they're just like, no, we're moving on. We don't care. And as a result, I think that is relatively bullish in the context of Tesla. Okay, cool. So, or in the context of tariffs, but also in the context of Tesla. In terms of macro data today, we don't have anything too crazy. Let me see. Oh, we have new home sales. Okay, so at about 9 a.m., we will get new homes, or 10 a.m., we'll get new home sales. Nothing else yet that we got that was too wild. We do have one of the Fed presidents who's speaking. We'll see what he has to say. We'll get new home sales month over month. Oh, we'll also have consumer confidence today. I forgot. We have consumer confidence at 10 a.m. So at 10 a.m., we will have consumer confidence and new home sales. Those can definitely be market moving events, more of the consumer confidence versus new home sales. but we'll see at 10 a.m. when we get those numbers. Okay, let's talk about Palantir. So a new article came out yesterday that I wanted to bring to everyone's attention because I thought it was very interesting in the context of Germany and some of the struggles that Palantir has been having in Germany. So let me pull this up right here. This is from a German media publication. And the title of this is Federal Council Calls for Rapid Deployment for Police. Palantir is in live operation with the Bavarian police. The Federal Council is calling for the nationwide use of the data platform as an interim solution. So we talked about the Palantir Bavarian connection about, I would say, 8 months ago when we found out that Palantir is working as in a test trial with the state of Bavaria in Germany. This is the part of the article that I want to read to everybody that kind of highlights the issues that they're dealing with. So I'm reading with my phone, but it's basically in this article. I'll put this link in the chat for anyone who wants to read this. I just have this screenshot on my phone. Okay, so here's from the article. The Bavarian police want to pave the way for Palantir. However, the plans had been put on hold in the meantime when the interior ministries of some federal states rejected the monitoring system, and the Federal Ministry of the Interior also decided to create its own research and analysis platform for the police instead of Palantir, aka they're doing it themselves. The platform that they're trying to build themselves does not yet exist. The current priority in the Police 20 program is to get the participants' data into the P20 data warehouse, a spokesperson for the BMI said in response to the questions online. As long as this data transfer had not taken place, a corresponding service for evaluation and analysis would not take place. The development of the evaluation and analysis service has been postponed until the transfer of the data has made further progress. There are currently, quote unquote, no plans to use a Palantir solution as an interim solution for data analysis in the federal government, aka the federal government doesn't have a data analysis solution right now because they're building it themselves and they're not using Palantir. In a resolution dated March 21st, 2025, the Federal Council is calling for precisely this interim solution in order to immediately close the gaps in the capabilities of the federal and state police forces in terms of information processing, data consolidation, and analysis. AKA, the Bavarian state is using Palantir and it's effective for them. And they want the rest of the German population or the German states to be using what's been working for them. But because of bureaucracy inside of Germany and their distaste for Palantir, federal ministries are rejecting the ability to use those interior systems because they want to build it themselves. I thought this article was very timely to bring up right now because Karp has said time and time again the issues with Germany. And quite frankly, he said there is a revolution happening in Europe and Germany and France are being left out of it. Palantir right here at 97.54 in the pre-markets. And I think I think he's right about that. Like it's more, you know, you could either say that, oh, Karp doesn't know how to close deals in Europe. And that's why he's using Europe's inability to innovate as an excuse for their lack of progress internationally. Or he's dead right, and it's not a conspiracy theory. Every time he tries to close a deal, or every time Palantir tries to get into Europe and really give them software for free just to use, so they can start eventually getting into the ecosystem, they reject it for whatever reason they have to build it on their own. And the funniest thing about this, when I saw this article last night, like Germany's not the best at building software. Like, yes, they have SAP, but like they're not like, and SAP is one of those legacy software providers. Like the idea that they can do it on their own requires a fundamentally innovative culture in the private sector that is working with the public sector to be able to unleash new products and services at a meaningful pace. That's not happening in Europe. It's just not happening in Europe. It's happening in the United States. And you got a company like Palantir that is willing, quite frankly, to give away a lot of that software for free. Like the Bavarian contract, I believe, was 5 million euros. Like it was nothing, right? It was a very small contract because Palantir just wanted to show that, yes, it works. And in the future, we can expand that contract, but we want to show you guys that it has a chance to actually deliver results, which has been the Palantir thesis for, the majority of how they've done business. But that's not working right now in Germany. So I think international expansion will happen, but it will happen once Europe finally realizes that they're getting so left behind. And unfortunately, until then, it's likely going to be an issue for them to innovate, or for Palantir to be able to meaningfully get that exposure. Nonetheless, the stock doesn't care. I mean, this has been an incredible run for Palantir, 97.62. This also makes me feel like we're having a real rally here because Palantir should not be pumping. Tesla should not be pumping. Like these stocks are leading the V-shaped recovery versus lagging it. And when they're leading it, given the nature of their multiples, that tends to say, all right, quote unquote, we are so back. Now, granted, how long does that last? Is that able to sustain itself? Are these multiples justified via earnings? I guess we're going to find out over the coming weeks when we do get earnings. But it doesn't feel like sort of a fake rally when these are the stocks that are kind of leading it. It's just a question of how long can that momentum sustain itself. So that's what you got in the context of Palantir and Germany. VW also built software. We know how this went. Yeah, it's just. And again, I have nothing against Germany or Europe, dude. Like I hope to visit them in the summer. I just from the analysis I've seen, the best software in the world is not coming from that part of the world. It's coming from America. And like in Germany, France, they're great at a lot of other things. But when it comes to tech and software and innovation, it's America. For some reason, the culture in America is what leads to these promising companies that end up becoming multi-trillion-dollar software tech companies, which Palantir might be on the way to getting to. But I think it's hard for Palantir to get to $1 trillion without Europe. They need in all the $1 trillion companies. They have a massive international business. And eventually they're going to have to scale into Europe because that's just too big of a TAM that is being left out because of politics. By the way, speaking of Europe, Facebook Meta is introducing a $13 ad-free Instagram in the EU because they've had a lot of issues in the context of showing certain advertisements and targeting in the EU and dealing with the regulations. In response to EU privacy rules restricting and targeting without user consent, Meta is rolling out a paid option called SNA that lets users opt out of ads. Desktop versions are expected to cost around €10 a month, while mobile pricing is expected to be higher to account for App Store fees. Would anyone pay €13 a month to use Instagram? Like I feel like Instagram now, look, I don't use Instagram that much, so maybe I'm biased here, but I don't think Instagram is as cool as it was 10 years ago. Or even 5 years ago. Like it's like to actually pay them, unless you're building a brand on Instagram and you're like an Instagram influencer or whatever, like to casually scroll Instagram reels to pay $13 a month. I don't like who's paying that, dude. Like, I don't know. That's like, I don't think anyone in the US would. I mean, people might pay for that stuff in the United States, but like it's only if they're influencers, not because they genuinely care about getting rid of the ads. So the good thing about the Instagram ads is like they don't feel like ads. I mean, you got to give Instagram credit. Like when you're scrolling through the ads, it feels like native content. And Facebook has done such a good job at architecting those advertisements, at making it feel like they're not really ads. So to pay to leave those ads is not that enticing to me. But again, this is what happens with EU regulations. This is why they've got to navigate it. I pay for YouTube. Yeah, I pay for YouTube too, but YouTube Premium is one of the best subscriptions ever because you're getting valuable content. Instagram, you're getting like just stupid stuff, dude. Instagram, like, I've never walked away from Instagram and felt, man, that was like intellectual. Like I just learned something there. It's literally pure dopamine. But YouTube is like, you're listening to a podcast. Like you don't want to hear ads in the middle of the podcast. So, okay, you pay for premium and it's like $13 a month. Like it saves you time without having to skip the ads and all that stuff. On Instagram, it's nothing, dude. It's your meme supplier. Yes, as Kristen says, right? It's a meme supplier. That's essentially what it is. It's thirst traps and meme suppliers on Instagram. Also with YouTube, you get YouTube Music. That's fair. You also get YouTube Music as well. All right, cool. So that's what we had in the context of Palantir, Tesla, and some of these tariffs. Let's get an update from Mike Wilson of Morgan Stanley. Again, this guy was super bearish 2024, started changing towards the end of the year. Here's how he's thinking of this market right now and why he thinks this rally theoretically is tradable and people can take advantage of it right now.
Well, it has been, I guess, look, I think we're just marking to market with respect to, I think we came into the year a bit more worried about the first half. We had a range of sort of 5,500 to 6,100, and we hit the low end of that range. So, the fact that we bottomed right on that number, I guess, made us feel better that technical level was real support. But really, at the end of the day, I mean, everybody's talking about tariffs right now, but the reason the markets are lower over the course of the last 3 or 4 months has nothing to do with tariffs. It's mostly to do with the fact that earnings revisions have rolled over. The Fed stopped cutting rates. You had stricter enforcement on immigration. You have DOGE. which all those things are growth negative. And then tariffs is just kind of the final piece that kind of, got people really kind of bearish at the end. And I would say,
and that's not a horrible point. Basically, his argument is once the stock market woke up a month and a half ago and realized that 30% of GDP, which was government spending, was going to start to slow down, which we've seen with layoffs in the government and Doge, that's where growth started getting hit, which I think is fair. And now if the market can adjust to these new government spending estimates along with Q1 earnings revisions, theoretically, we could hopefully go back higher if the tariff volatility is done.
say the thing that really got the S&P going down at the very end was when it became clear that the president does not care about the stock market, at least for now. And that lack of a Trump put was like really new news to people. So we felt like all of that sort of capitulation was good at 5,500. It started out with a low quality rally, which is what we expected, meaning a short squeeze. And then, what we noticed is that the revision factors on the Mag 7 are actually starting to stabilize a bit. So the last couple of days, those stocks have acted better, and that can take the index higher. Like how high? 5,900. So we're almost there. It's halfway done. I mean, the move has kind of already happened. I think the bigger moves are going to happen in these lower quality areas where the short base is still pretty stiff. And ultimately, though, I think I agree with a lot of the commentary you had on the panel there, which is that it's going to remain volatile through the end of the second quarter. So whatever rally we're getting now, we think probably ends up fading into earnings into May and June, and then we'll probably make a more.
Okay, so do you agree with that this rally fades into earnings when we get the Q1 numbers that Mike Wilson says probably will be a little bit worse than expected, and then we might rally after that, but it's not going to be a straight line going up. It's going to be like, all right, we're good now. We get earnings, that takes the market down, and then theoretically we can go higher into the summer.
More durable low later in the year.
A durable and new low. Like we haven't seen the lows for the year.
Potentially a low. Let's put it this way. I think the chance of us making a new high in the first half is very, very low. Okay. Could we make a new high in the second half of the year as people look forward to 2026? Yeah. Do we have to make a new low in the S&P 500? I have no idea. But what I can tell you this is that I think that it's going to be a trading environment at a minimum. Okay. That's their best case scenario between now and probably the end of June and into the summer. And look, that's why we're here on Fast Money. Our job is to be both, we have views on the long term and we have views over the short term. And our views in the short term, I think, have been pretty accurate.
Yeah. So, Mike, you came out with that note this morning, but last week's note, so every Monday you come out with it, was also hinting to this. You were kind of suggesting the fact that some of the names that you really care about from an earnings perspective were kind of getting overdone to the downside. If you think of the Fateful Eight, they were doubling up the downside. Tim, they were doubling up the downside that we saw in the S&P 500. So on a day like today, it's kind of interesting when you see Apple, Microsoft, Broadcom underperform. Is that sort of price action, is that the sort of thing over the next few days, if we just don't see them continuing to participate, that you might kind of go to a more bearish stance?
Well, there's dispersion in the Mag 7, Fateful 8, whatever you want to call them. I mean, half of the group was
encourage him, Mike. Okay, go ahead.
Half of the group was quite positive today. I mean, Tesla had a massive move. So, look, I think the barbell to own right now for this trade has been Mag 7, but also low quality, and that's what this is kind of reflecting. I don't think the market's trading off of fundamentals. Across. It's more about technicals. It's more about the flows. Where the short base is greatest. But the one piece that we felt good about this week was that the Mag 7 or Fateful 8 revisions are starting to sort of bottom out a bit. And the other trade that we advocated this week was that the U.S. could have a relative move back against Europe, because as we go into second quarter earnings, right now with the dollar weaker, that's going to be a headwind for European earnings and actually a tailwind for some of the larger cap names in the U.S. Like these are the trades that, this is what we're being given, right? So we have to take advantage of these trades when we see them.
Now, what he's saying about Europe is actually very interesting, that a weaker dollar actually is worse for Europe, whereas a stronger dollar was better for their earnings. If you take a look at this chart right here, European equities had their highest weekly inflow in over a decade last week, and American or foreign investors as a percentage of American equities, U.S. equities, had one of their largest outflows at $8 billion. So you had $8 billion leave the United States from foreign investors. Let me just pull up this stat right here. and you had $6 billion, I believe, go into Europe. Now, $16 trillion, which is about 23% of the broader U.S. stock market, is still owned by foreign investors, which is like still a decent chunk. However, yeah, so this is the stat right here. This is the exact stat. Foreign investors pulled approximately $6 billion from U.S. equities last week. This was the third largest weekly outflow on record, surpassed only by March 2020 and by March 2023. March 2020, we had COVID. March 2023, we had the Silicon Valley banking crisis. So foreign investors took out $6 billion last week from U.S. stocks. European stocks got $4 billion in inflows over the past 4 weeks. This was the highest in a decade. U.S. stocks still have about $16 trillion of foreign holdings, which is about 23% of the broader U.S. market. It would be very interesting if some of that money that left last week, which was not the time to leave the U.S. markets, like if you pulled your money out of the U.S. last week, you're probably really upset right now. Like that last week we were bottoming, theoretically, at least for the Monday and Tuesday and last Friday. It's been a nice little rally. And so you might have some of that money, and maybe that explains some of the Tesla surge we saw as well. I mean, imagine a lot of people just sold Tesla last week that were foreign investors, and now they're seeing Tesla go back to the moon, Tesla 283 right here in the pre-markets, and they're like, holy crap, I missed it. I didn't know Elon was going to hold this freaking all hands meeting, and now we got Robotaxi. Optimus is going to have some stupid updates. Bada boom, bada bing, I got to get back into Tesla. And you take that money back out of Europe, and you potentially pile it into U.S. stocks. I mean, it could be creating that type of FOMO effect from foreign investors that already were in the U.S., left during the bottom, and might be coming back in as we get more green. Andrea says, tell me about it. I sold Tesla 2 weeks ago. See, it's like, no one's perfect at timing this thing. But again, if you're in the U.S. and you're a foreign investor and you think there's better opportunities, like the past 3 days has kind of shown you there's not that many better opportunities from the U.S., at least over the past 3 days. European defense contractors obviously had a great run over the past couple months, but the question is, can they sustain that run given how high they went versus some of these stocks that got oversold? Now, granted, look, Tesla's expensive right here. I mean, you're paying a hell of a multiple for a stock that's probably not going to have a great Q1. So, and everyone knows that. I don't think everyone thinks, oh, Q1 is going to be so amazing and, Tesla's going to beat on their earnings per share. But still, this is where the FOMO comes in around Tesla. It's like Tesla, the reason it has these juicy option premiums is because it moves like this. There's a reason why people buy these types of call options. They expect these moves, and we've seen it over the past 5 years historically to the downside and to the upside. But if that foreign money starts to come back, I think that could be beneficial for Tesla. Bitcoin right here, 87,664. That's up 1.2%. You got Coinbase, that's flat in the pre-markets. KB Homes, not the best earnings. They were down about 6.8%, similar to Lennar, that was down 5% last week. Celsius was up 6%. They're up another third of a percent right now. AMD had a great day yesterday, up 7%. Amazon was up 3%. It's up 1% right now in the pre-markets. NVIDIA is not catching a break. NVIDIA is not really running with the rest of the market yet. It's down about 1% of the pre-market. CrowdStrike's up about 2%. SMCI is up 0.5%. Grab is up 0.5%. Netflix is up a little bit. Duolingo's up about 0.12%, and then Palantir right here up 0.88% in the pre-market. SoFi, let's take a look at SoFi. They hit 13 yesterday. They're at, wow, 13.81. Look at that. Up another almost 1% in the pre-markets. They were up 6% yesterday. SoFi looks like it wants to get closer back to that $14 range. We do have a piece of Robinhood news that just broke right now. Robinhood has added John Hegman to their board of directors. He used to be the chief revenue officer at Meta. John Hegman. Okay, this is the guy, John Hegman. John has a strong experience driving innovation and growth across platforms and brings valuable perspectives as we expand our platform for millions of users, says Vlad. Technology, the power to transform industries and create new opportunities for people everywhere is important, said John Hegman. Robinhood has been a trailblazer in making financial markets more accessible, and I look forward to contributing to its next phase of growth and innovation. Interesting. So they got the CFO or the CRO at Meta. He was there since 2007, and they're bringing him over to Robinhood. Dude, I like this move. Robinhood's bringing a lot of these people that are deeply rooted in scaling trillion-dollar tech companies, in this case from a financial perspective, as he was the CRO, over to Robinhood. Dude, Vlad wants to build a $1 trillion company. Vlad wants to build $1 trillion. I don't know if Robinhood can get to $1 trillion. I think it could definitely get into that $200-300 billion range. But I feel like I wouldn't bet against Vlad. I had one of the Robinhood employees who doesn't work there anymore. He was like the he was like the chief statistics officer of some product or whatever. He put out a tweet after their earnings, and he said, I was thinking of selling my Robinhood stock back when it was like $10 or $12 after it finally popped from $6 a year and a half ago. But the one reason I didn't is because I don't bet against Vlad. That's it. I don't bet against Vlad. And it was one of those things where I never heard an employee like say it like that, but like he was just like, I like, you just don't bet against him. Like this guy, he's ruthless. He wants to win. And it's really hard to find founders that want to win and then have the execution to back up how hard they're trying to win, which is why they're hosting their first event of 3 events this year in San Francisco in a couple of days. I mean, like, they're ready. They're ready to really go for it at this point. And the good thing is the biggest bear case I've had on Robinhood is that they're a cyclical business and that as the market falls, Robinhood will fall. But they are starting to do more and more things to try to get out of that cyclicality. And event contracts, I think, is just one way for them to say, hey, we can get into other verticals that really aren't that cyclical and that can open up new lines of business for us. And I think the more they do that, the more the street's going to respect that they are a sustainable business, irregardless of what happens in the market. Anything notable on Oklo earnings? Oklo had earnings yesterday. They had no revenue and they lost a ton of money. So Oklo is down 5%, probably for good reason. Again, this company, it's pure potential. So if you're buying it right now, it's on a story. It's not on earnings. But yeah, they lost $75 million for the full year. They signed a lot of deals and a lot of stuff is in production, but no actual revenue is coming from that yet. We talked about PMI yesterday. We don't have PMI today. PMI was good yesterday. It helped the markets kind of feel that we were more contracting than expanding versus contracting. Today, in about 30 minutes, we are going to have consumer confidence and new home sales. So those are going to be the 2 big things in 30 minutes. And then we'll have Jason hop on the show for an hour to do Technical Tuesday since we won't have a market close today. And we'll get his perspective on if we are bottoming out or not. And then we'll be done for the market close today. Irregardless is not a word. Well, if you say it enough times, it can become a word. You know, it's like it's like sometimes you keep repeating it over and over again, and it becomes a thing. That'd be funny if I keep saying it over and over again, and you guys just like get used to the word, and you start using it in your life. And by the way, did anyone text their family that the text I told you guys to text them, or your friends? Which is, did you know that the S&P 500 reclaimed its 200-day moving average? I sent it to my mom, and it was hilarious. Some of you guys messaged me that you sent it to your friends, and it was so funny. One dude sent it to his friends who only care about football, and his friends were like, dude, explain this to me in football terms. And he used Grok, and he like made a football analogy about what it means for the S&P 500 to find its 200-day. You got to keep telling people that, dude. We have to use our collective energy to sustain this 200-day so that we can keep going higher. Scott says, I don't have any friends. Well, we're all your friends in the chat, Scott. So you can definitely tell us. All right, here we go. We got 20 seconds. 20 seconds. Let's see if we can keep up the green 3 days in a row. It would be very nice to see if we can hold this momentum. Let's see. We got a long 8 hours on the day, but maybe we got a shot to continue this green momentum. Tuesday, March 25th, 9:30 a.m. Thank you, everybody, for being here. The stock market is once again open. All right, wake your ass up. Robinhood's up 1.14%, baby. There you go. Almost $49 on the hood. SoFi goes down. That's weird. SoFi was up. I think that's going to reverse. SoFi, that's a nice little fall from the pre-markets. It's down 1/3%. Let's see if that reverses. Tesla got a red candle. Makes sense. I would not be surprised if we see Tesla go red today. It had a hell of a day yesterday. However, I think the momentum could take it higher, falling from about 284 to 280 in the pre-markets. Or sorry, as soon as the market opens from the pre-markets. That's typical. I mean, it had a hell of a day yesterday. It's going to give back some of the gains, but I don't know if it has to give back all those gains And I would not be surprised if it reverses. Palantir right here, also red candle, 98 to 97.20. That's up still 0.5%. S&P 500 also opened with a red candle. It was up 0.3%. Now it's up 0.26%. The S&P 500, 575.62. Again, still above that 200-day moving average. MicroStrategy is down 0.33%. D-Wave is down 2% in the quantum space. Amazon's up 0.5%. Qs are basically flat. NVIDIA is down 0.7. We're seeing pockets of red. It's not as bright green as it was yesterday. There are definitely pockets of red. Grab is holding on to some green today. Grab's up about 0.5%. Rivian's up 0.5%. GameStop's down. Reddit is down. Marathon is down. Grab right here, 463. Netflix, 986. Netflix trying to go back to 1,000, up 1.3%. I feel like there's a headline on Netflix that came out that we're missing, but Netflix right here is up about almost 2% right here, 985 currently. Big Bear AI, that's up 5.6%. Robinhood, 49.63. Tesla getting a little bit of a green rebound. So bottomed at 279.2 in like the past minute. We'll see if it retests that level or it can make a new high. Palantir, 97.30. S&P 500 still flat at 575. Robinhood looks like it wants 50. Let me check resistance on Hood for 50. Resistance is 211,000 shares. Wow. That's a lot. That's okay. So they're definitely, that's going to be a hard one to get over, but 211,000 shares. SoFi, there you go. SoFi's green. That's a reversal. That made no sense for it to tank as soon as it opened. 1380. SoFi to 14. I'll check the resistance on that. Robinhood now 49.37. It's going to have to fight for 50. I don't think it'll easily get 50 psychologically. It's not going to be easy to break through. For SoFi, there's only 18,000 shares at $14. So that doesn't seem too bad. Tesla's about to go red. Tesla cannot hold that 280 level, 278.87. That's about 24 cents from officially going red. The S&P 500 as well. It's barely holding on to its 0.25 percentage point gain. Palantir's doing okay. Palantir, let me check 98 resistance, 97.40. Palantir's not doing horrible right here. 97.58. At 98, we have 5,000 shares, which is nothing for Palantir. That's not too bad. Is Meta moving? Meta is, that's up 627, up from 578. So a nice little 8% reversal from the lows of last week. APLD, Applied Digital, that's at 802 right now. SoFi at 1381. Let's look at the other Mag 7s. Is NVIDIA green? NVIDIA is red, down 1%. Tesla officially red, down about 0.3%. Amazon's green, Google's green, Meta's green. Google back to the 170s. Microsoft 393, Meta 627, and then Apple 220. I still have 2 long calls on Google that basically I need them to get to 210 for me to break even, which means Google needs to get to 210. So I've been selling calls against that, and those calls have been doing well. But yeah, I'm underwater on my long Google calls, 150 in the monies. I hope by January 2026, Google can get back above 200. I feel like that's not a crazy ask. Obviously, depends on the macro environment. But that's my exposure to Google, and we got to see if it can get back there. But selling calls against it so far has been working out well. Tesla now going red, 277, and NVIDIA at 120. I have 150 shares left to fill out the NVIDIA position. I have 850 shares of NVIDIA at $121.80. Want to get to 1,000, so we have this last 150 that eventually we just need to buy and get it over with. And I don't know, dude. Are we going to see 104 again on NVIDIA? Like, it's like we would really have to get another 10% correction for that to happen across the market. I don't think that's necessarily happening, or at least another 5% correction. But NVIDIA right here at 120, that is down on the day. Apple goes red. Microsoft goes red. Meta is losing some steam. So is Google. So is Amazon. All of them kind of following Tesla and NVIDIA as they go red. The semiconductor names are pretty much mixed. SMCI's up, AMD's up. SMCI and AMD going opposite of NVIDIA, which is just weird. That's not supposed to happen. Broadcom's red. Taiwan Semi and Qualcomm are green on the day. CrowdStrike up 5%. That's nice. They introduced some new AI cybersecurity product yesterday. I don't know exactly what it is, but it was a headline. I don't know if it's like a game changer or anything for them, but market seems to like it. It has to do with endpoint security, but they're mixing in some new LLM features inside of it. But that one up a nice 5% on the day. Jason's going to be on in about 25 minutes. Jason will be on in 25 minutes, and then we'll do an hour of Technical Tuesday. Thoughts on Nike? So Nike got upgraded again today, 6770. They got upgraded by some firm that says, I'm forgetting the name of the firm. See if I can find the name of the firm, but I think it was Oppenheimer. They came out and they were like, hey, Nike's going to 110. Like, it'll be fine. Oh, sorry, it was Piper Sandler. Piper Sandler said 90, and they maintain an overweight rating on Nike. And they said, we view our estimates as being conservative, and we believe that Nike will outperform in their classics division, aka their classic products, in fiscal year 2026. I just don't know who buys Nike when NVIDIA and Google are trading at the levels they're trading at. Like, that's just, I don't get it, dude. I don't get it. Like, I know Bill Ackman's deep in it. I don't understand why, because there are so many opportunities out there, unless he thinks there's this massive, he's not doing it for the dividend. So there has to be a legit reversal from the stock at 67 to whatever he thinks it's going to get to. That is very evident. And I guess on a risk adjusted basis, he feels that the gain from NVIDIA 120 to 150 is more risky from Nike 67 to 100. And so, his job is to mitigate risk. So maybe that's the reason. But I feel like you take a risk on tech at these multiples versus Nike. So yeah, I don't own Nike. I don't own it. I don't think it's bad to own Nike right here. This is going to be a transition year, and the CEO has said it multiple times. 2026 is when they're going to get some momentum. 2025, they just have to navigate the current environment. Dan says, I just applied for the Hood credit card. Okay, awesome. I know a lot of people are mad they didn't get their credit card, but Vlad did say that about 500,000 people will get it this year. They only gave it to 100,000 people so far. So there is a lot of growth in the number of credit cards that will be coming out. And probably they've already given it out to a ton of people in Q1. So that one should be expanding over the year. Palantir now goes red, 96.60. We did touch 98 in the pre-markets, but now it is red. Rocket Lab also red, 0.59%. Tesla 275.4. That one's down a full 1%. I don't think anyone can complain about that, given the move Tesla made yesterday. But we are seeing red. And then NVIDIA, look at that, down 2% on the day. Any updates on Grab? There's no updates on Grab. I continue to be bullish. I would be buying more options if I didn't hit the limit on the total amount of contracts I could buy on Robinhood. No, look, I really do think the story is going to play out. But at this moment, the street's waiting on two things. They're waiting on better earnings revisions, because the last earnings was fundamentally sandbagged, in my opinion, from an EBITDA perspective. And then number two, they're waiting on this GoTo merger. Is Grab going to actually buy GoTo? Which more and more that I read about it, I think they are. It's just going to take some time. Also, here is an update on Grab. I don't know if I saved this. I probably did. But the dark pool orders on Grab have been pretty aggressive. Like, very aggressive. We have seen about 20 million shares on the dark pool get traded. Now, you don't know if on the dark pool they're buying or they're selling, because that like plays out in its price action later, based on where the stock goes. But you can tell that they are being traded on the dark pool. Yeah, there it is right here. And usually institutions use the dark pool, for those that don't know what it is. It's just a way for institutions to acquire stocks without kind of showing the market that they're acquiring. Like, if someone put in an order for 13 million shares of Grab right now at 462, like, that would show up and a lot of people would be like, holy crap, what's happening, right? Like, why is someone buying 13 million shares? So if an institution wants to acquire shares without people knowing that they're acquiring it because they don't want the stock to get up too high, this is what Buffett does, Druckenmiller does this, Ackman does this, all these guys do this. They use dark pools. And they're complicated ways that JP Morgan, Goldman Sachs sets up in order for them to buy these shares. About 40 million worth of Grab shares have been bought on the dark pool over the past week. I shouldn't say bought. They have been traded on the dark pool. Maybe they were sold, and those institutions don't want people to know that they're selling them. But more likely than not, at these valuations, I think they're being acquired. And so I think they're being acquired because some of these institutions really do think that there's going to be a major change this year, and one of those changes might be because they end up buying their biggest competitor. But we will find out over the coming months in terms of how this story plays out. So, look, I'm still very confident. I have my full position. I have no plans to sell. I would be buying more. I think these levels are kind of stupid for Grab. I did buy more at 420 when it got there. And so we'll see over the coming weeks what happens. Can you please do a video on selling calls against leaps? Yes, we'll talk about that in options 301. We'll talk about that probably in 2 weeks. That's basically the poor man's covered call. We will talk about that a little bit more deeper the next option session I do with Jason. Where's Palantir? Are we getting some love on Palantir? Are we flipping green? Palantir. Wow, we flipped green. Oh, that's nice. We flipped green, 97.35. Palantir looks like it really wants to hold on to this. So we bottomed, or not bottomed, but we hit a low of 96.60 today, a couple minutes ago. Is Tesla reversing as well? Robinhood's reversing. Tesla, a little reversal at 276. Nothing too crazy from 275. Big Bear's up another 5%. Bitcoin almost 88. D-Wave just went green. This was down 3%. Amazon's back above 200. NVIDIA slightly green. It was at 118.5. Now it's at 120.2. And then AMD holding on to its green as well. Yes, Options 201 is on the channel. If you click on live on YouTube, you'll see Options 201. And if you just scroll down, if you also just type in Options 101 emit, you'll find that as well. Look at Trade Desk. I actually took a small look at Trade Desk. I'm not that interested in it, dude. Like, I know it's had a 50% haircut. The space they're in feels rather, wow, Palantir's about to hit 98. The space they're in feels rather competitive when it comes to ad tech. And like, I'd rather buy Google over Trade Desk. Like, I don't know, dude. I could see Trade Desk outperforming Google, obviously, because it's been hit so bad, but a 50% drop in earnings or after earnings means the street has lost a lot of confidence in you. And I don't know enough about the company to feel like I'm smarter than the street. Because if you buy a stock after it's down 50%, you've got to know something about the stock that the street doesn't know about, right? And I don't know. I think the street is much smarter than me when it comes to Trade Desk. So I don't know enough about ad tech. I do think the multiple is a bit more attractive here, but I'd rather buy Google. Like from a safety perspective, I'd rather just buy Google. Palantir right here at 97.50. Again, there's only a couple thousand shares at 98 waiting for it. So there is a shot we hit it. Robinhood right here trying to get back to 49. There's 211,000 shares at 50. So that's going to be harder. Meta at 625, and then SoFi right here at 1377. Grabs at 464, and Nike at 67.54 right now. There's the link for 201. Thank you, Zocold. There's the link for 201 for those that want to check out the options video. Rumble had earnings today, so they're up 2%. Now, Rumble lost a ton of money, a lot more money than they were expected to lose. So the street wanted them to lose like 7 cents a share. They lost, or the street wanted them to lose 12 cents a share. They lost $1.15. I actually don't know why the stock is green right now. Like, this is not a good quarter. They beat on revenue by like $1 million, but they lost a ton per share. So not sure exactly why this one's getting some love. Now, granted, this is a cult stock. There's a lot of people that believe in Rumble as like the anti-YouTube because Rumble preaches like free speech or whatever. I've tried using Rumble before. It's not a good product in my opinion. It's like, it's just a shittier version of YouTube that says they care about free speech. Like I have yet to meet someone who actively like uses Rumble every day. Now they do have like 50 million users or whatever. So there are people that use it, but I don't know, from a tech perspective, I don't see the vision there. But there's a cult that believes in it. And so maybe that's why it's currently up 3% right now. Passion Planet, thank you for the $10 super chat. Admit, love you, Palantir, since 10 down to 8 and now to 125. The kid is a legend. Appreciate you, brother. Thank you for being here. Yeah, maybe we get back to 125. Who knows? I mean, look, that multiple would be pretty incredible. Even at 97, this multiple is aggressive. And you know, my base case was, hey, can we at least consolidate in the $80 range for Palantir this year? And hopefully we're able to do that. But again, it speaks to what you said right there. A couple people messaged me about this as well, which is that when Palantir fell from, $30 to $8, people just held. And still to this day, even at 96, people are holding. Like I met a lot of you guys at the Bay Area meetup that told me you guys bought at 10 and you're just not selling. Like one woman told me she basically thinks of her $10 average as like a lottery ticket, and she has 60,000 of those $10 averages. So it's like you got 60,000 lottery tickets and you really believe in the company. You can either call it delusional or you can call it long-term investing with a belief in an exceptional management team. And the street's giving this multiple because I think the street really believes the story can play out. I mean, again, I think we do have to acknowledge about Palantir. We went through one of the ugliest corrections of 2025 just now, 10% down, peak to trough. And Palantir's max pain was 71. Are you kidding me? Palantir's max pain was 71, which still is a 6x from the lows of 2024 and more than a 10x increase from the lows of 2022. Like that was max pain. I mean, that's just like, and I know 125 to 71 seems aggressive, but like, 125 was there for a couple of days. I don't think anyone really believed we were going to sustain 125. It was just very aggressive. But I think of it more so from where it started the year at around 90 back down to 71. That to me is like, it's just not a horrible drawdown. And so for the people asking for it to go to 30 or 40, like, I just don't think we're getting there, which is why, we could see another downturn, but maybe it doesn't have to be as aggressive as what people think. When is Anduril IPOing? I think 2026. I don't think this year. CoreWeave is IPOing next week. The ticker symbol is CRVW, I believe. I'm not buying that IPO again. I read their S1. I just think they have a lot of threats in case they lose some of their Microsoft revenue, which is 62% of the business, but they're growing like 500% year over year. So it's a very fast growing business in the cloud infrastructure space. Just kind of scared of, how they're generating the revenue. Tesla right here is down 2%. All right. So Tesla's getting hit today, which is normal. That's probably realistic. 285 yesterday, now down to 273. But it's not that bad given the momentum from yesterday. Doug says Anduril has no reason to IPO at this time. I agree. Anduril has zero reason. I mean, they don't need the money. They just raised $1 billion, right? So I doubt they need the money for this. Where's Rocket Lab? CrowdStrike's up 4%. Rocket Lab is down again. Rocket Lab rebounded nicely from that 15 low that it had on earnings, but it's basically been stuck in this range from like 18 to 20. And I guess if you believe in Rocket Lab, this is accumulation time. But if you've always not believed in it, then you probably thought that $30 run that it had this year was fake. Rocket Lab did get some disrespect yesterday. It got some respect from Cantor Fitzgerald that said, hey, we think Rocket Lab is worth $24. We think Neutron's going to go very well. We think there's going to be 10 launches by 2027. So Cantor Fitzgerald was like, yeah, we believe in the Rocket Lab story. Martin Shkreli, another esteemed financial analyst, said, introducing the Bag 7, the 7 stocks that make up the bag holder economy: IONQ, Rigetti, QBTS, Oklo, AMC, Big Bear AI, and Rocket Lab. Look, I like Shkreli, but I don't know why you had to put Rocket Lab in that list. I feel that's a little disrespectful. I feel like that's a little like, hey, you can put Big Bear AI up there. You can put Oklo. You can put AMC. You can put all the quantum names. Rocket Lab, that's a little... Samir says, what? I have 5 of these 7. Oh my gosh. It's the Bag 7, dude. He's calling it the Bag 7. It's hilarious. It's hilarious. Okay, this news this morning, I forgot to mention, Apple did place $1 billion order with NVIDIA. Yes, that is correct. So I actually was surprised seeing this news because from my understanding, Apple has not been buying a ton of GPUs from NVIDIA because they haven't really been building their own LLMs. But Apple is reportedly in the process of placing orders for about $1 billion of NVIDIA GB300 systems, according to Loop Capital analyst and Barua. And Loop Capital has done a really good job analyzing NVIDIA over the past couple of years. So I think I would take their reporting as truth here. But that's another $1 billion for NVIDIA. Now, granted, what is Apple doing with this $1 billion? Or what is Apple doing with these GPUs? Because they're not building their own models. Or are they? Are they building their own stuff? Like, because Apple's been outsourcing the models for a long time now. Maybe they've got something cooking that we don't know about. Tesla right here, 271. That's down about 2.3%. Robinhood down about 1.2% as well. But it looks like that's another $1 billion for NVIDIA. And then NVIDIA didn't even move on this news. Yeah, dude. Either everyone, including myself, that's accumulating NVIDIA right now is going to seem like the biggest idiot in a couple years, or this would have been like taking candy from a baby. It would have been the easiest thing ever, buying NVIDIA just below 120. I think it's literally going to be one or the other. I don't think NVIDIA is flat a couple years from now. I think it's either at like 180 to 200 or it's at 70 to 100. And this is the range where you got to decide what side of the aisle are you on when it comes to NVIDIA. Palantir right here, 96, Grab at 463, CrowdStrike 389, Meta 624. Rest of the market kind of selling off, not really holding on to that much of its green. We got consumer confidence in 10 minutes. That's going to be important to see. FedEx getting a little bit of green. Block is down. Tempest is up a little bit. And then Google back below 171 at 168. Covered calls, again, have just been incredible in this market. every time you get a little bit of a boost, those covered calls protect you to the downside as it gets hit. Did you see Figure is the most sought after private startup? Yes. So I saw this news yesterday. Figure and XAI are the most sought after private companies right now. Basically, if Figure was a public stock, they would be up like 10 or 15% yesterday based on this news. So these are the 10 most sought after companies in the last 30 days on the private markets. Figure, XAI, Anduril, Anthropic, SpaceX, OpenAI, Revolt, which is a fintech company, Neuralink, Grok, which is an inference training company, and then Mistral AI. So, yeah, I mean, look, the startup market seems very healthy. Like valuation wise, I don't know if that's healthy. I mean, some of these things like OpenAI, I think is overvalued, whereas an Anduril, I think is properly valued. A Figure AI, I'm biased because I'm an investor, but I think that could be undervalued given the progress that the company's making, even though it's at 40 billion bucks. So I like Anthropic. I don't know. Is 60 billion for Anthropic undervalued or overvalued? My gut feeling is overvalued because like it's just an LLM. Like that's all, you know? So it's like some of these names I think are just getting hyped up because they're building foundation models and they're the first companies to build them. But I don't know if they're going to be the ones that capture all the value from them from an economic perspective. But then others like Figure, which are building robots that they can sell for billions and billions of dollars. That seems like real revenue in the future that you're getting a multiple on. So we definitely have a thriving startup ecosystem, but valuation wise, we'll see which ones of those actually can go public and hold a public valuation. No, they didn't spell Grok wrong. GROK is a inference training company in the data center space. Grok is part of XAI. Grok is not its own individual company, but GROQ, this is a inference engine that kind of combines hardware and software together. I think Chamath seed funded Grok, GROQ. They talked about it a little bit on the OpenAI not the OpenAI, the All-In podcast. But it's basically fast AI inference. And they started this thing in 2016, so it's been a long journey. But now with the revolution of GPUs and LLMs and AI, that's when they really started to maintain momentum. The consumer report today is in about 7 minutes, and it's about consumer confidence. That's what we're looking at today, consumer confidence. Last time we got this number was a couple weeks ago. So this is going to be last time we got Michigan. This is CB consumer confidence, which is still an important one. Michigan is like the big one that people care about. But we'll see if it affects the market at all. I think it's going to be a miss because I think consumers are getting less confident. Like I think we're seeing that in a lot of pieces of data. I don't think we're going to see an increase in consumer confidence to some meaningful level. But I don't know if the market's going to care that much about it. Where is Tessie? Tessie 272. Down about 2%. Since Figure is working on their own software and LLMs for the robots, do you think that that could be a source of revenue if other robotics companies want to integrate Figure software? So the answer to that is no. And the reason I'm saying no is because Figure's software, aka their LLMs, are trained on Figure robots. AKA, if another robot company wants to license their software, it wouldn't even work because all of the data that they use to train their robot models are based on the robot hardware, the very specific hardware that they build. That's what Brett said in the podcast that we were doing. And his argument was that he thinks all the other robotic companies are going to fail because they're using models that are trained on like the internet and then applying that to a robot. And Figure was doing that a year ago. That's why they collaborated with OpenAI, but they ended that agreement, I think like 8 months ago, because they realized they can't just use a LLM. They have to have an LLM be trained on proprietary hardware, which is the Figure robot. Now, granted, I think other companies will be able to do the same thing Figure's doing. I don't think they're doing anything that's that innovative in regards to training, but they're just doing it really fast. And I think in this game, it's as who can get quickest to market when it comes to putting the robots out there into the world. Optimus, I believe, is doing it via XAI. Like Elon hasn't said this yet, but I think the brain of Optimus is going to be Grok, and they're collaborating heavily with XAI. That's my assumption. And so I think Optimus and Figure have those data advantages. Aptronic just partnered with Google, right? Every one of these robot companies needs a brain. They partnered with Google DeepMind. Google invested a good chunk of money in their Series A that they just raised, about $400 million, which I think the market's not giving Google any credit for the fact that, they're trying to get into robots as well. But all these robotic companies need a brain. And I think, a lot of people are saying, well, there's all these robots coming out of China and they're moving so quickly. I think America needs to pass a policy banning Chinese companies from selling robots into the United States. First of all, I don't think any American companies want to buy Chinese robots, because why would you want a literal data collection machine walking through your warehouse that's inevitably connected to the CCP, because the government is in control of a lot of these companies. I'm sure they'll be in control of the robot companies as well. I think it's a national security issue. I think the United States should be like, we will not let Chinese companies sell humanoid robots in the United States. And if China wants to ban our robots, so be it. There's a hell of a market without needing the Chinese infrastructure. But like, I really do think, dude, like, we do not want Chinese robots in our homes. Like, are you kidding me? And there are some people that will buy it because like it'll be cheap, right? And people just want the cheapest thing. But I feel like the United States should intervene and be like, no, like you cannot have a CCP robot in your house. Like they already have TikTok infested throughout the country. A robot, bro. So and then that would be a tailwind for Tesla. That'd be good for Tesla, because then Tesla wouldn't have to deal with Chinese competition. But in general, I think the national security threat would be ridiculous from China here. So as long as they promise not to turn the robots against us. Yeah, well, see, that's the thing. Like, China can say whatever they want, but I mean, dude, imagine China has an army of millions of robots in the United States in people's homes, and like China wanted to invade the US. I know I'm being hyperbolic here, but just that thought experiment of like, clicking a button in mainland China and the robots start, like it's like those doomsday scenarios you think of. And it's not even trying to fearmonger. It's just like, it's China, bro. You can't freaking trust, you can't trust China. Out of all the countries in the world that would be making a physical thing that can quite literally kill you, if it was programmed to do so, I wouldn't want China to be in charge of that. Palantir right here reversing 97.35. That's up 0.5%. It's been going back and forth between 95 and 96 throughout the entire day. We're going to get consumer confidence in 3 minutes. That's going to be important to see the numbers that we get. And then we have home sales as well. But those are the important numbers we're looking at. Let's look at Adobe. The CFO bought 500 grand worth of Adobe yesterday. That's up 1%. So it looks like Adobe's finally getting cheap enough for insiders to get excited to start buying. So you got Adobe right there at 398. Apple got upgraded to 250 yesterday by Morgan Stanley as well. It's at 222 right now, up 1%. They cited the AI features coming soon, even though Apple has delayed Siri until 2026. So that one still might take some time to see. Samir says Tesla to enter Saudi Arabia April 10th. Okay, let's see if that's true. Tesla, Saudi Arabia. I thought they were already in Saudi Arabia, to be honest. Oh, wow, yeah. Tesla is opening in the Kingdom of Saudi Arabia April 10th. The invite just went out. All right, there you go. Saudi Arabia. The prince is trying to modernize the country in a lot of different ways, even though they still have their core religious beliefs that govern. But he's been doing a lot of different things to give women a bit more freedoms than they had a decade ago. Now Tesla's coming in. There you go. Rip Lucid. Yeah, dude. Maybe Saudi Arabia didn't let them in for so long because they were pumping up Lucid, and then they finally realized it's freaking Lucid, and they're like, screw this. Get the Cybertrucks here. Get rid of these damn Lucids. Let's move on. They were in the UAE. That's correct. They were in the UAE. They were not in Saudi Arabia themselves. The UAE is so interesting, right? It's this tiny little island in the Middle East it's the place where Westerners can go and like live like a normal kind of Western life and spend a ton of money. But the rest of the Middle East is like, you can't just easily go to some of these countries like Iraq or Afghanistan and just like be a typical Westerner. But in the UAE, it's like this little part they carved out in the Middle East to just suck as much money as possible out of Westerners. And that's the one place you can go to and kind of be a little bit more normal. It's not an island. Wait, why did I think UAE was an island? Wait, what is it then? It's a country located on the eastern part of the Arabian Peninsula. Okay, so it's kind of close to the water, but it's not literally. Okay, you guys are right. You guys are right. Dude, if you thought I was gonna get my geography right, you got another thing coming for you. This is the cool thing about me. Like, I can make these mistakes and I don't feel bad about it because you guys expect me to make these mistakes. Like, was I supposed to know it's an island? No. It's like, all right. It is what it is. All right. Consumer confidence, 92.9 versus 94 expected. That's a miss. New home sales, 676,000 versus 680,000. That's a very slight miss. So new home sales down by about 4,000. Consumer confidence down by about 1.1. That's not that bad. That's not that bad. Is the market reacting badly to this? That is not that bad. That's not that bad at all. So consumer confidence down by about 0.1. Tesla down a little bit on that. S&P, NVDA is down 1.61. Okay, a little bit of a red candle there. S&P 500. Yeah, it's basically, okay, S&P just went red. Officially just went red for the day. Officially just went red for the day, but it's a very slight, 0.01%. Market doesn't care that much about it. Yeah, 92.9 versus 94. I thought it'd be worse than that, bro. I thought it would be like 87 or some shit. I thought it would be like the Michigan one where it was just bad. But this one was not as bad. The Richmond Fed Manufacturing Index, we also had that. That came in at -4 versus 8. Okay, so that one was a little bit more of a miss. -4 versus 8. That actually makes more sense given some of the data we saw last week around manufacturing and import prices. So maybe that's actually why the S&P went red. Manufacturing index came in at -4. The street was expecting 5. Sorry, the street was expecting 8. So that's a bit of a miss. But consumer confidence not getting as bad of a miss right there. VIX is down on this. Yeah, the market doesn't care. The market does not care. New home sales, again, not bad at all. Down by about 4. Again, everyone keeps saying like there's this big housing problem, but there are so many people with money on the sidelines ready to buy a house. They're just waiting for mortgage rates to go even a little lower. And even with mortgage rates at damn near 7%, you got 676,000 homes that were sold last month. The expectations were 680. Like that's just not that aggressive to the downside. S&P 500 is going red, but very, very slight red in terms of this data. The 10-year, let's take a last look at that. 10-year down a little bit, 4.323. That's good. Consumer confidence going down means that they're going to stop spending, which means inflation should go down, which means the 10-year should go down as well. But it's not anything meaningful for the 10-year to like really nosedive on. All right, cool. That was the macro data. Let's get a quick little update on that right here. We will get Jason on and we will begin Technical Tuesday.
Those are a little bit weaker. So it's kind of a split in the big tech action today.
Meantime, getting some breaking economic data. Let's get to Rick Santelli. Hey, Rick.
Hey, Carl, indeed. You're watching yields move lower. I'll give you the culprit here. It's consumer confidence. For March, we're expecting a number around 94, 92.9, weakest since Jan of 21. Present situation, 134.5, weakest since Sep of 24. If you look at expectations, 65.2, weakest since July of 22. Now, here are some positives. We're not going down dramatically in rates because last month, February final on consumer confidence from the conference board got upgraded rather nicely. Now, let's quickly look at Richmond Fed Manufacturing, -4, weakest since Dec of last year. So basically the weakest since, of the year. And if we look at the service side versus manufacturing, -14, that's the weakest since May of 23. And we had non-manufacturing Philly this morning turn the market at 436 in a 10-year because it was weak. Now, new home sales for the month of February, 676,000 seasonally adjusted annualized units. That's actually the best of the year. It comps to Dec of last.
Wow, the best of the year. Not bad. It's been a kind of crappy year for home sales, but that number seems like it's ticking higher. And the expectations were only 677,000, so it only missed by about 1,000 homes.
Year, and we all know rates dribbled a little lower in February. We know existing home sales were actually pretty strong, up 4.2%. So let's get more granular with new home sales, and for that, we'll head east to Diana Olick. Diana?
Well, Rick, you said it's the best of the year, so it's 2 months of the best. It's really a little bit below expectations. The street was looking for up 3%. You got up 1.8%. Sales up 5.1% year over year. But mortgage rates came down during February pretty sharply, starting at 7.05% on the 30-year fix, coming all the way down to 6.74%. And this count is based on signed contracts. So people out during the month watching those mortgage rates come down. So you might have expected a little better. Prices, though, down 1.5% to $414,500. That's the median price of a home sold in February. And supply came down from 9 months to 8.9 months supply. But I want to touch on consumer confidence, which Rick just talked about, because we did get KB Home earnings last night, and they were a big miss, and they lowered revenue outlook. But CEO Jeff Metzger pointed to economic uncertainty and cooling buyer confidence, saying demand at the start of this spring selling season was more muted than what we've seen historically, despite a heavy level of traffic in our communities. And this comes on the heel of Lennar's chairman last week. They beat expectations on the earnings, but their guidance was terrible, and that's what hit the stock. And Lennar's chairman, Stuart Miller, said even recently, where household income indicates an approvable mortgage qualification, he said elevated personal debt levels have often presented an additional impediment to already strained mortgage access. And he also talked about affordability. So it's a very difficult spring ahead. And these new home sales numbers today don't seem to be what they should be, given that drop in mortgage rates. So it's I would say it's a slight gain, but it's a weak gain, Sarah.
Okay, Diana, thank you very much.
All right, that's what we got for consumer confidence, new home sales, the Richmond Manufacturing Index, all of that. Some of it being good, some of it being slightly of a miss. S&P 500 basically flat on the day at 0.1% positive, 574.70 right now. All right, we are not having a market close today because I will be flying to San Francisco for this Robinhood event. So our Technical Tuesday analyst, which I think is the best technical analyst on the planet, was nice enough to show up early, his time in California, 7 a.m. He's up early for us to analyze the world of technicals. If we bottomed, what's happening with Tesla, NVIDIA, Palantir. Let's get into it and roll the intro.
We are so back, baby. We are back. Good morning, man.
Good morning. How are you?
We still have Miss Rachel in the background, if you didn't know. The boy is dancing here. Say hi.
Look at that. Look at that.
Hello. Look.
Absolutely adorable.
All right.
Look at that. I love the Superman shirt too.
Go back.
He was great. When we did options 201, the kid was in the background and he didn't make too many noises. So he was great. He was an angel.
He's good. He's good. Most of the time until he goes behind the desk, and that's not so good. But it happens. So yeah, I think
are we back? Are we actually back, Jason? Or
so last Tuesday, I think it was Tuesday, I said that we're done going down. I believe I told you on our stream, and that it might take a few days for us to start going up, or maybe a week. Well, it took about 3 days. We started going up on Monday, and here we are. So we are in the middle of either one of the two, a very beautiful bear market bounce, a dead cat bounce.
no,
Or
please no.
Well, so that's what we're gonna have to. That's the question. And I think, what's true for me is that we're going up. And regardless of whether or not it's a dead cat bounce or not, it could be a very strong up. And so I want to be part of it. So I'm long, with the exception of like a couple things, which are mostly like the safety trades. So like gold, I'm looking at is like, below 280, I think is going to be fine. I think it can go sideways for a little bit, but I want to see that kind of like slowly go lower, and a couple other safety things, but nothing major. Let's
get into the S&P 500 then and see what you're looking at, and if the price action does look rather bullish to you or not.
All right, so what screen number is this? I think this is screen 8. So I'm just going to take a couple things down just to make it a little bit cleaner.
For those that don't know Jason, by the way, if this is your first time being introduced to him, I'm putting his Twitter right here in the chat. You can check him out there. We've been doing a series called Technical Tuesday for basically like 4 months now. And yeah, every Tuesday we go through technicals.
So here's the weekly count, right? So I say count. So the weekly candles, if you will. So last Tuesday, I said as long as we were over 555, we were not going down. Or I think last week, so I do a couple streams, but definitively at 555, whatever it was, that was the level that we needed to hold. We actually that week, this is last week's candle. This is a weekly chart. This is last week's candle. This is this week's candle. Over last week's high, and it's as simple as this, which happens to be 570.95. We are going up. See, you jinxed it. We will be going up. And the question is like, where do we go up to? It's usually, and this is a fib tool, it's usually about 50% of this candle, the candle that we're coming back into. So that would put me from a week to week perspective, somewhere around 580 on SPY. Very similar on the Qs, but it could go slightly higher. It could go up to 585. And that would be a normal basic bounce. Now, from the bottom, if you were long from the bottom to here, that's about 7%. A good dead cat bounce would usually put you about 10%,
right?
Believe it or not, which is just under 600. And so, what I'd say is for this week, as long as we can keep trajectory, we should be looking somewhere around 580. Sorry, I'm just trying to make that a little clear. Somewhere around 580. By the end of the week, the trajectory to get there is going to be choppy because of where we are, right? We're sitting on the 200-day simple moving average. If I drill in just a little bit, that's this red line right here. Let me take some of this stuff off so it's not in your way. That's this red line right here. And we're actually, I think we just, as we speak, yeah, I think that little pullback this morning, like if I extend this 200-day line, that would be basically right where we bounced off.
Yeah.
So that
is this bullish or is like this is good, right?
It's near-term bullish, right? So like I said, I think the trajectory takes us somewhere in between 581 to 585. So low 580s to mid 580s, not anything higher than that. If I were to say like what's an average week's range, an average week's range actually takes us up to SPY as high as 587 if SPY were to be just moving on an average week's range perspective.
Okay. Yeah, I think it was encouraging yesterday hitting the 200-day as well, and a nice green 2% day, up 7% from the lows. Now, when you say it would get to 580, that would be the proper dead cat bounce
for this week.
So, what do you think?
I know it's like super specific. So people that aren't used to technicals, it's more about like reading momentum and understanding like day by day what's the trajectory that we can go, and basically every day I want to see it really just like make a lower high and higher highs and higher lows from here on out. So, but does that mean that we have to go like straight shot up? No, and I don't think that you'd want to see that. As I'm looking at the rest of the market right now, it looks pretty decent actually. So I'm looking at Apple new highs, Amazon coming back towards the highs, Microsoft coming back to the highs, Google new high. And so I think as we see this little bit of a bounce, I think it's encouraging. So I would not be discouraged at all. I'm just going to switch over to the Qs really quick. So QQQ, similar thing, right? So I use these things called NFP levels. It was 480 on Qs. From here to me, like it's very similar. I think that we could make it all the way up to 500s,
right?
Which is 10 points higher, and probably test 510s by next week, which would be a typical trajectory again for like a little bit of a dead cat bounce. So I don't care that we're above or below the 200-day simple moving average. I'm strictly looking at basic price action. What I will say is because of if it is so I'm in a morning stream. I don't know if we have a lot of people that watch the morning and the afternoon, so I don't want to be too ultra repetitive. But when we talk about simple moving averages, first of all, if you're looking at my screen, these are all locked on the daily time frame. They're not set to chart. So if I change them from day to day or from minute, 10-minute chart, they're in the same spot. 30-minute, right? Same spot. 1 hour chart. It's in the same spot. So that way, weekly, they're always in the same spot. So these are daily, simple moving averages. And the reason I'm referencing that is because we've talked for a long time is like, hey, when you have the distance between your simple moving averages kind of expanding, we usually get a lot of movement. So like the distance between the 20 and the 50-day here was expanding, right? And so we got some pretty heavy movement. But where we are now is like, if this trajectory holds, just go back to a 30-minute so it looks a little bit better. If this trajectory holds, well, what's going to happen is that we're going to have a little contraction, right, of these simple moving averages. So they're going to get tighter. So I expect some chop,
Right.
if that makes sense. But I think it's about roughly 2 weeks. And then that's going to take us, like we've been planning, right into April 2nd. And we're going to hit, is it tariffs or what? So I think between now and then, it's kind of, look at Microsoft New Highs. It's kind of like the fear was real, right? The fear was real. It was scary. And I mean, scary. But you kind of have to step into that. And I think the market overshoots all the time. So it went a little bit further downside than probably was needed short term. And now the market's going to correct itself a little bit, and it might overshoot to the upside just slightly in that process. And then we maybe kind of base out and find somewhere in the middle. So which means that whatever happens here, number one, because there was too much damage from a daily perspective or weekly chart perspective, there was too much damage for SPY and the Qs both to say, hey, look, we are clean. Clean uptrend is it's just way too much damage. So this was that prior uptrend line. This was a trend line. A normal bounce can actually take us all the way back to it. And so this is basically saying, hey, over the next month or so, we could get really close to all-time highs from here, but it's not necessarily over. So stay on your toes, if you will. Don't be too over leveraged long at the top. But from here for the next week or so, technically this is giving me clean signals of a choppy move to the upside. So the market's going to try and base out. I wouldn't be scared here is my point. I really wouldn't be scared right here, right now. I think it's scary because we've come down so far, and you look at it, you're like, we have a 2% up day, but at the same time, look at these charts, right? They're way off the lows. And worst case scenario, we've been talking about this 2022 from a technical perspective was a very similar setup, not from a fundamental, but from a technical setup. This was as close to that as you can get. So this is 2022. And even in this case, basically we are coming into here, which ended up being a pretty good bounce from the lows. This was 9%, 8.5%. So we're about halfway there if that's the worst case scenario. And even this really, again, from a technical perspective, technicals only, this is as close to this kind of setup as we can get. You basically come back and you retest what was that prior support. So moving forward, what we need to do is find those levels, and I've put them here on the charts. That's 585, right? So that prior support area that we broke down from is about 585 or thereabouts, which makes perfect sense to come back up to and retest.
I think this makes a lot of sense. So two things real quick, and then we'll get right into Tesla. First, thank you, Dents, for the 12 super chat. Such a rare opportunity for us Asian folks to watch Technical Tuesday live. We are using this. Thank you for sharing. Appreciate you. Thank you, Jason, for being here as well. Second of all, before we get into Tesla, can you technically explain what is a dead cat bounce?
So I think going back to what I just reviewed, so the reason I was reviewing that, this is 2022, this is a dead cat bounce. And so the dead cat bounces, it's basically when we got, like we said last Tuesday evening, when we have the VIX at 30 plus, right? You might have your downside levels where like, okay, this is where I think support is. But really, like, if you thought, let's say here, this is where I think support is before on SPY, when you have a very like extended VIX, you're going to overshoot it to the downside. You're going to come back up and you're going to base around it. And then you might get back in there. But so the dead cat bounce is like if you hold a beach ball underwater and you let it go and it bounces, but it's still not going way up, I guess.
Yeah.
Well, I guess that's not the best analogy. It's like does a dead cat, when a cat dies, does it bounce? Maybe that's a better analogy. Like like the shock. But it could be violent, right? So you can get a big move to the upside that basically just locks in a lower high, if you will. But if you were short this entire time, like you missed a pretty big rally from the lows. And I think it's that. I think, is this a good place to get short? No, it's not, right? I think we talked about AMD. Like, do I want to be short? I'm not a fan of AMD, the company, but did I want to be short AMD at $100 or 105? No, right? Because I'm like, this thing, it could rip my face off if I'm wrong for just a second. And actually, congrats to any AMD people that is a huge bounce, $20, $15 off the lows. It went to 95. I saw it at 110 yesterday and probably climbing. So there wasn't enough juice for the squeeze to me to be short. And I would say that here now today. If you're really concerned, just wait a little bit, right? Give it a little while. To me, I pulled the rookie move because on my high conviction Robinhood, right? Where I started DCAing way too early, way high. And here's what I don't want to see happen. And I'll just use my personal stories is that I don't want to be continually adding here either, to be over leveraged at the highs and then see it come down on me 10% day, sell it again at the lows, only to see it rip back up to the upside after that, right? So I think the point is that I'm trying to make here, is to never be fully out, but never either be fully in either, because I always want to have some dry powder at the ready.
Okay. Can we look at Tesla and what the hell happened yesterday, and if this makes any sense?
Yeah, I mean, I told you. Did I tell him, guys? I'm pretty sure I told him.
I think you bought last week, so you've been long.
Yeah, so it is as of like the Friday. So last Friday, where I was like, we're not going lower anymore. Whether or not we were going higher, it wasn't happening just yet, obviously, but ideally we should. So again, this is potentially another dead cat bounce, but I will say on Tesla, this is possibly one of the biggest trades out there in the market from a dead cat bounce perspective. So if you miss the 250s, I don't know that's never going to show up again. There are a lot of gaps, by the way, in the markets that happened over the weekend. I honestly wouldn't worry about those gaps right now. I think if you're trying to trade for these overnight session gaps, you might be in a world of hurt because the market usually goes. It's a gap and go right now. So where does it go to? I think is the next question. You guys, Amit asked me this morning because I gave him such a hard time about texting everybody yesterday that the S&P was over the 200-day before it was over the 200-day. He texted me this morning saying that we can do it again on Tesla because it opened up right at the 200-day simple moving average, and maybe we could will it over. So that's true, right? So this is where we are, right? And the boy is screaming over here, so he's having a good time. I think Tesla can play. We call it like this simple moving average ping pong. It could take a day or two breather, but it doesn't need to on Tesla. And so if you remember the last time I took a shot on Tesla long, it was right around that 330 mark. Yeah. And then when it lost it, I was like, no, we're going to 250. I had 250 in my cards. We actually got to 210 with that elevated VIX. but there's probably a lot of people still caught right here around that 326 level. I'm gonna take my drawings. I'm gonna take this green box off for a second, and I want you to look at the right hand side of my screen. This is something called a volume profile, and it basically shows how many shares were traded at certain prices. So we can see on the chart that there was a lot of volume traded. It's almost like time at price, but not quite. There were a lot there's a lot of shares traded around that 330 level. There's also a lot of shares traded in this level, 251 down to 220, which happens to be that box that we were sitting in for about 2 weeks. Now, from here, I think that we are on the trajectory to fill all the way back up. So to me, that makes it 330 plus to the upside. And so I'm looking at this right hand. So we look at this like a mountain range. So you trade in the valleys. And so when you find a situation like this, where there's low volume traded in this area, what this is going to tell me as a trader is that this is the area where velocity and momentum can pick up very quickly. And so on something like Tesla, I think when we first started doing these technical Tuesdays, it was probably Tesla chart also.
Yeah.
And I said something maybe similar back then, which was over here, that it can go to 330 in a couple sessions. And you're like, dude, that's crazy. And I'm like, dude, it's Tesla. I'm going to say that one more time. So Tesla can make a $60 move within 4 or 5 days of trading, or less. Maybe.
Do you think it needs a catalyst, or? I
think it has a catalyst now. I think that the situation is we have earnings at the end of the month. We have Elon holding an all hands, what have you. I think that you can look at the market and be like, all right, this is maybe, just maybe a little bit overdone. I know. And
he definitely thinks it's overdone.
Yeah. And it's due for a bounce, and a typical normal bounce. There's something wrong with my things.
By the way, what is the volume profile called on TradingView?
VRVP. It's so the one I use, it's VRVP. It's visible range volume profile, which means that it changes based on how much chart data. I say chart data, how much of the chart I have in view. So the visible range of the chart, this is the volume profile. And so you still see this little peak up here and this big mountain peak down here. So this was heavy support, 2 of them, right? Down to 219. I had 250. And I think it stopped there for about 5 seconds and then went straight to the bottom one. But in general, it's this large area here. So again, as long as we're holding over the 20-day simple moving average, which is this white line, I actually think that, it's possible that it chops, but because it's Tesla, you got to know Tesla's personality. It doesn't need to. It can look like it will. It's been sideways for how long? 17 days, 2 weeks. It was down in that hole between 250 and 220. Believe it or not, it was 17 days down there. So a little over 2 weeks. I think it's ripe and ready for a run, and we're in the middle of it.
Well, if my thesis here, and let me know if you think this is correct, if we hold these levels and Q1 sucks and it takes a 15% haircut, it goes back to levels we saw a couple weeks ago, which isn't that crazy.
Right. No. So I'm not in disagreement there either. Right. I'm really not. So this could go all the way up. I don't want to say it like this, but we should see like the 50-day. As long as we're holding the 20, we should see somewhere up to the 50-day. Tesla has room to get to like 380s if it happens, and then we could still see something like this. And that whole trajectory, it's very possible. But day to day, minute to minute, again, I trade stocks and options for a living. I'm in the market every day, all day long. So I'll see this happening, whereas maybe the regular person may not, because they're not paying attention. But I can look at this here and now and be like, again, higher high today. As long as we're locking a higher low today, we're on track.
Right. Right.
And that higher low could be as low as 257.
No.
But this is all already on its way, underway. So I just zoomed into a little bit smaller chart. But net, I would say as long as we're holding this general area, I think the dips are buyable, quite frankly, as low as 250. And if we're over 285, that is going to be the 200-day simple moving average. I think you make a very quick shot to 300s, and then over 305, it's a quick shot to 325 from a day-by-day perspective. So for here now, we're literally fighting it, right? So this pre-market move is it's like an actual bounce definitively on that's red line. That's the 200-day simple moving average. So we rejected it once. We opened up in the pre-market at it. It looks like we're going to come in and try again. Do we necessarily crack it this next try? Not necessarily. But if you guys text enough of your family and friends that Tesla's over the 200-day simple moving average, we could will it into fruition. But until then, that's where we are. It's battling. It's in the battle.
Okay, can we do Palantir before NVIDIA? Because I think Palantir is showing some really incredible strength right here. Curious your take on this one.
So it's similar, maybe a little bit longer of a what we call this setup. We call this a base and break. And so you based out very long into for 25 days. 25 days of creating this base, right? Inside of this, you know, I don't know if we talked about this, but I've talked about this. They have this little, we call this a liquidity grab. And then you have this second base. And this is your kind of typical pattern trader situation. The only issue I have here is that this is mostly complete. So all I did right now is I just doubled that range. If you want to get real precise, I guess we can. And I would say, so real precise, you would take essentially all of this and double it, set it right on top of itself. And that takes you to around that 116 area, which again is picture perfect for this possible dead cat bounce scenario. The trajectory to get there in this environment is choppy, right? So can it come back and retest this kind of similar thing, right? So remember on the right-hand side of my screen, there's that volume profile. This is that mountain range, right? And so we are going to go from peak to peak, essentially. Why is my tools not working? In here. And then if we can get over that, then we have another one up to that 115, which again, so I have a couple levels of confluence, if you will. For now, what I want to see, best case scenario, is this 96 order block. It's an order block. From here to here. So again, with the story, right? So what's the story here of the chart telling me? It's telling me that there were people that sold here. Maybe some of those people are the same people that bought here, and they're just like, you know, super paper hands and just instantly in and out.
Yeah.
But what are they going to do right here and right here? And that's exactly where we're sitting. Does it make sense? So we're going to find out, do these same people who bought here, do they buy, or really do they wait for a little bit of a pullback? I think in either case, doesn't really matter to me. It's likely going to put in a higher low, because again, so it matters. That's the level to level, day to day that you want to see. But I think where I was going with that is that if this is the lower high, we did make, oops, this is structural, sorry. So these were lower highs. This is a lower high. This is an equal high, which is going to be like neutral.
Yeah.
So lower high, equal high. but we did get a higher low, and then we got a higher high. So we're just doing that, and we're slowly on the right trajectory, and we've just continually slightly over. So this can be a higher low anywhere in here, is my point. And it's still structurally sound. Does that make sense?
Yeah.
So I don't need it to go like it's at the point where when this story changes that that I will be a little bit more concerned. And so again, this is that trajectory from here. We're chopping in this channel. It can come up like this. And eventually it's going to get to a point of contention. And what happens at that point, that's what's going to be important next. Do you break through and come back down? It's all possible. Or do you just continue on going to the upside?
As a fundamental analyst more than a technical analyst, I've been pleasantly surprised that the multiple has been able to sustain itself for Palantir. And so now, I mean, look, is there really that much of a difference from 100 to 90 on a multiple? No, both multiples are extreme.
Right.
So if the market wants to take it there, yeah, I guess it could.
Yeah. So I think this is about right for the broader setup. It's like, I wouldn't want to press my bets, but I do like buying at near-term, medium-term support in general for this market to continue on a slow grind to the upside. In the meantime, what I want to see is confluence, right? Is I want to see that safety trade starting to unwind, right? So this is gold. What I mean by that, this is like your definitive safety trade, right? We have a bit of a topping pattern here, right? Like all this. And then you have your prior support that was holding right here. We rejected yesterday in the pre-market. We're rejecting again today in the live market. This is, if I were to say like, what does a short look like? This is pretty textbook short. But the way that we are going, I think because there are people that are a little scared right now, I think
gold becomes their support in this situation.
Yeah. So I want to see money coming out of this generally. And that's going to give me a little bit of confluence. Do I think that this has to break down completely? I actually don't. Like I posted a trade today where I think this is more of a don't be long than necessarily being short, like selling like very close to the money calls. Because I think it could chop sideways for a little bit longer before it makes another move, which in my estimation, like if we're right and the growth scare is just a scare, that would take it down a little bit further, nothing crazy, but around the 270 area. So it's not a big trade by any means, but it's something I want to watch. In general, like from a sector to sector perspective, I also want to look at staples, right? So this is your other safety trade. XLP is consumer staples. This is where you're going to run to when when there's a growth scare. This is not a very bullish chart right now. So seeing staples pull back here is giving me a little bit of confluence also that the growth scare might be, the market might be saying it might be a little bit overdone, but this is a good kind of barometer read of like, okay, what's the appetite at the moment for growth? If it's not there, we would assume that you normally be seeing staples go up. I'm only putting some caveats on there because there's some shenanigans with the dollar. But at the same time, like this is generally speaking a good thing for a rally back in the growth sector.
We got Tesla green, Bitcoin 88.
Tesla's green.
Tesla just went green, 279. So
look at this,
271 to 270. Not bad.
Not bad.
Yeah, let's do hood, then we'll do NVIDIA. So let's do hood. What do you think?
We're gonna do it, dude. What a move off the lows. Oh my god, I feel dumb for selling. I didn't sell, like I added. So for me, I don't know if anybody's in this same boat. For me, I was adding, I think probably about here, and this 20% or more, just like waterfall was It was a bit aggressive.
It was annoying. It was annoying as hell.
It wasn't just annoying. I'm like, if the market really wants to throw things away, it's like, okay. And the drawdown from peak to trough so far was egregious. This is literally 50%. So is freaky. Probably my highest conviction equity. I know Amit's not actually bullish on Robinhood, even though he gets invited to these conferences. But what's true is I feel like this is a generational opportunity. So while I have that type of conviction, I oversized so heavy at the highs, and I was that guy, right? So I was buying all of this, boom, 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 bot. Like,
that no. Where Jason's looking at right there, that's when I got a text message from him 2 weeks ago, and he was like, "Hey, so can tell me more about Robinhood's monthly metrics?" And I was like,
literally right here. I probably called the bottom on that, but I bought the bottom also. The problem is that I bought so much. I was way over my skis that by the time we got to like 38s, I was like, I gotta get out. I gotta close what I sold because I'm not willing to do it again. And I wouldn't have any. I used all my cash, all of it, right? So I had to free up some cash. Unfortunately, that's what happened. It's still by far my largest position. Still my highest conviction, but that's what conviction can do for you. You just be like, oh, I don't care about timing because I know it's going. And you're right, but you're wrong on the timing. But yeah, so anyways, that's where we are. I think it's good. I think it's come quite a ways. And if you didn't know, I mean, we are up since the lows about 45%. Amit also texted me about selling these $40 cover calls, and I was like, screw that, right? Because like I don't want to do that on something like this because that type of move, it's very possible. So where we are right now, I think that's the better question. I think there's a couple areas. One, I want to get some confluence from a technical perspective for fibs, because I know a lot of people. So basically, when I do this kind of stuff, it's a lot of self-fulfilling prophecies. This yellow line and this $47 mark right now, that's actually an important level to hold. So while I think that we can pop a little bit more here, we're right into this, what we're going to call the bear's golden pocket. And so this is, we're actually firmly in the baby bear zone, right? So where there's some bears, if you're going to be bearish, they might actually be stepping in on us, right? I say us, on me right now, all the way up to 52s. So in this area, I want to be more cautious than not. I opened some short-term options on Friday when I saw it like crossing over the 20. And those were for 45s for April. I've since closed those out. I also opened some debit spreads. I closed half of those out. And I also opened some, see, this is what I'm talking about. I just went a little overboard. Junes. And I still have some Jan 2027s, as well as a bunch of equity. So it's a little, so don't give me a hard time for selling some, guys. This is all I got, because I got a bunch of those. But anyways, I think that we can see.
Do you still have the $100 calls? Because I loaded up on the 9500s. I have like over 500 of those now.
Yeah, no, I still have those. I'm not doing anything with those. I actually still have some Jan 2026 covered calls for 100. Okay. So again, when we talked about what would I do, those gave me more net dollar protection, if you will. And either way, like I said, I don't want to sell it. I don't want to sell any more because, yeah. But I want to just be long right here. Does that make sense? Like, I don't want to press my bets, but I want to let it ride. So I'm letting it ride from here. I think we get to potentially 52s, and that's going to be like a major area right here. So when we get up into this area, that's when I'm going to be, all right, I want to see this hold, right? Because this is the zone, and we're in it, right? We're in it. If we do get past that, then again, we have a major imbalance that I've been eyeing since earnings. That does take you to 62. But my point is, if we can get over 52 at some point, there's a tradable range that's like a very quick $10. That's like from 52 to 62, actually.
Right.
which is wild to me, but that's there. But until then, look, I got to go one step at a time, one foot in front of the other. Listen, we're up 40% from the lows. Like, what a bounce. I don't want to be pressing my bets just now. I'd like to see it go sideways for a little bit and hover around exactly where we are right now. So if it goes up to 53s and it comes back down to 48s, I'm okay with that.
Yeah, I would agree. I think hovering around this 48 to 50 range is a very good thing. Phil right here, thank you for the $5 super chat. Jason, thanks for coming on the show. Always enjoy your fair perspective and insight. Thanks to you both. By the way, Amit's steak should be medium rare.
Did you guys know? So Amit has come to the Bay Area twice in recent months, in recent weeks. And it's always like super, it's beautiful, bright, sunny. And then the minute Amit lands, it starts pouring rain. And I'm telling you, Amit, right now, it's 85 degrees in San Jose today. It was 80 degrees yesterday.
I'm coming today. It better not rain.
I'm telling you, tomorrow, we're going to see rain. And it's instantly going to go boom to 68s. And you're going to be in the city, which means it's going to feel like 55s.
Okay, tomorrow, rain is not on the schedule. If it actually does end up raining, that's going to be ridiculous.
It actually is on the schedule.
No, I don't see it rain.
Well, check San Jose when you get a little wind. It's going to be.
Oh, you're right. You're right.
Oh, shit. It's been foretold. So I want to go into NVIDIA, right? So a lot of these are already underway. So I think Amazon is underway. I think Tesla is clearly underway. I think Google is underway, right? We can all assume it's underway. If you didn't know, now you know.
Underway meaning it's bottomed is what you're saying.
Yeah. It's already going back up. There is one that tends to lag recently. If you didn't know that, like, NVIDIA has been a recent laggard, well, again, now you do. I don't think you're too late on this bad boy. So I think this one's ready. This is ready to roll. I think this is the one that you watch for the next move. And I think that this actually makes the trajectory back to the 140s. And if not an attempt to do the 150s, which is a lot from here. What I will say is that we know 123 is that key level, right? And we have a lot of this major stuff. 123, by the way, again, is that it's $3 trillion market cap. That's what that is. That's why it is. So $3 trillion market cap right there. So we can see like it's a very, you don't necessarily realize how weird of a level it is to be at 3 trillion, because it's 1, 2, 3. It's a very random number. But the second that we get over that, and I think we're going to make a couple attempts to do so first, then we're going to probably come out of this channel. And this is way ahead of schedule. So I'm telling you this maybe a week before it happens, which again, it's already similar. And this is to like the 138s. And I think last time you were asking me, would I do cover calls on NVIDIA? And it was like I went to like a stock repair, which is kind of like my way of saying no, because I think it's going to go higher. I think as long as you're holding this overnight gap, which is 117.50, I think it's fine. But I do think that the direct trajectory here is right in initially to those 138 type levels, and where we see a lot of time at price again for NVIDIA is right in here. So again, making perfect sense to come back and retest this area before actually doing something before the next move, right? So however you want to trade that, that's up to you. But I do think that within the next, I would plan for this to take 3 to 4 weeks, if not more. But I don't think that it's actually going to take that long in reality. I just think it's going to be a slow start. But again, this area, peak to peak, we're in it. Where we're starting to get in it. Once we get over, it's going to be a foregone conclusion.
Why
might not look like it today, but it will probably look like it by the end of the week.
Why do you think it's been stuck in this range?
I just think it's the one that's got so much ownership, and it's like it's not as big of a discount from a price perspective as maybe some other things.
Yeah.
On the surface. And so, you know, and it's maybe overowned. I don't know if it's overowned or not, but I think it's just so large. It's like, you know, Apple takes a long time to move at 3 trillion, right? Microsoft takes a long time to move at 3 trillion. It's just something you're going to have to get used to because it's not a small cap anymore, and it takes a lot of money to move this bad boy, and it just takes some time.
Okay.
Market rug pull could change everything. Yeah, and we also talked about this. And so where I'm at is that I think that you stay long, you be long, maybe you get a little long if you weren't yet. But know that trading in the Trump market, what was the analogy, Amit? Is like walking down a golf course holding 2 lightning rods in the middle of a storm. You never know when the next tweet's going to come out. So you have to traverse the course with that type of mentality. So again, don't ever be fully in, don't ever be fully out, but understand we are technically going back up. But do we make all-time highs again? That's not in the cards. All-time highs are not in the cards yet. And it could easily be a bounce that locks in a lower high that does get sold off to new lows. So I don't personally think it's going to be there, but I need to say it because it's very much a possibility.
Well, yesterday Trump said some tweet about Venezuela and tariffs, and the markets did not care, which I thought.
What's cool about that is that if the market does get more numb to these tariff situations, this guy.
Is he getting a Red Bull, bro? He's getting his energy early. He doesn't need a Red Bull. He's filled with energy.
So I think the proper term here is cautiously optimistic. How's that? Cautiously optimistic. I would firmly sit in that bucket or box. You know, Amit should actually uncover his Google 150 January calls and just ride them right here. By the way,
5 calls for 175 expiring.
I think you buy them back, dude.
You think it's 175 by Friday?
Yeah, just buy it back. Like, what do you? Are you not profitable on them?
No, I am, but I'm just like,
okay.
I don't know. I've been running this campaign every week, and it's been working. It's just like you go 10% out of the money every week, and boom, you collect $200. Like, I mean,
is it 200? Don't let those go red on you.
Yeah, I'm up 45% on them right now.
Hide your children. Trump is tweeting. It's Google is a moist bounce. That's it was.
Hold on. Did you say it's a moist bounce?
Moist.
What is a moist bounce in the stock market?
It's like milk toast.
Okay.
But it's gonna get.
I don't know. I feel like Meta is a moist bounce. Meta's been 570 to 630. Like that one's more bouncy to me than Googs.
More bouncy or less? He's saying that they're saying that Google is less bouncy.
Yeah, that's my point.
Google was historically the last one. I think we talked about this, not a Google bull, but you remember, I'll put it to you this way. Do you remember what happened at 175 the last time? How fast that went down? It was right here.
Yeah.
So if you're, it's probably not the week to play. I would say it's definitely not the week to be on cover calls.
Okay. Guess we will see. I'm still.
Or you can roll it up and out to. I would maybe roll those up and out to like your 45 days at 190, 200.
Yeah.
Something.
Yeah, that's not a horrible option. Okay, so I have.
I'm not even in this trade yet, but I'm looking at it. I'm like, okay, this is about to go down.
Okay, cool. I have like 10 minutes left, so we could do a little bit of rapid fire. Then I got.
This is up to like 180s, I think, in 2 weeks.
All right, my calls will appreciate it. Can we do Rocket Lab?
Oh, okay.
We'll try to do some rapid fire on a bunch of these names. By the way, guys, if you do not know who Jason is, I'm putting his YouTube right here in the chat as well. Jason, you go live like every day at lunch, right?
No. I only do YouTube's. So I don't, a lot of technicians do this Sunday planning, I think that's BS. Like I've always just like, I hate doing Sunday weekly trade plans because by Monday morning you open up and it's like all your trades are invalid or already had your targets. So I always do Monday. So it's always Monday at the lunch hour. I go live and we do a weekly trade plan. That's it. Everything else, I'm on Twitter most days. We have our private group that I'm live on pretty much all day, every day. We have other traders in the group as well. So I have traders that are live right now in our group. But anyways, yeah, I do trade live somewhere every day, whether that's on Twitter. YouTube is mostly planning. It's not like actual live trading. Twitter is live trading and Discord is live trading.
All right.
But Rocket Lab, I think is okay. This is all very similar. The whole market's like this. We're like, even if this pulls back a little bit to like 19s, I think that would be a buy. I think
our Israeli said you're going to be a bag holder if you buy Rocket Lab here.
I think that if you don't know how to push the sell button in general, you could turn out to be a bag holder buying anything right now. Because like I said earlier, it's like I'm cautiously optimistic for a large bounce, but I'm also aware that if this bounces a lower high and we go lower, we're all going to be bag holders. So if you're adding, just I would preface that with like know how to hit the sell button, maybe. If not, you could probably just hodl. But anyways, back to Rocket Lab. I think that the direct trajectory is into 2250s. 2134 is that prior all-time high, which I've mentioned, I don't know, however many times. So below that, below that, I think is a possible to buy. But if you're not over it, you're still not going up yet. So that's your level. Is 2134. It's very close to here. In the meantime, you want to see it hold this 20-day simple moving average, which again, like I was saying, somewhere in the 19s. That's where I'd like to see Rocket Lab hold. If it's below 8, I mean, if it's below, here's the thing. This is what's weird. If I were to say, what's my risk to reward? And I'm going longer now, so Amit's gonna hate me. It's like, okay, your trade is like this, so it's a 2.5 to 1 risking 1 to make 2.5, even if you bought it right here, right now, because this could come down 18% and still be okay, but your upside is really going to be up to that 2850 level, and really like where the bears where they were accumulating before. And you want to find out if these people are trapped, right? So you're probably, best case scenario is something like this here and now, right? Trading for this upper range. And again, I'm saying trading because you have to be aware. This is, to me, I'm looking at this as an opportunity to acquire more shares of whatever it is that I'm doing, which means that I'm probably going to sell towards the highs just in case. And if it goes higher, I'll buy it back and I'm okay. But again, I'm an active trader, and I do time markets, or at least attempt to. So yeah, I wouldn't, the problem is I wouldn't say like 1865, I throw it away, because this can get real whippy. I think if you see it at 1865, that's ideal. But look, you're still under the 200. This looks like a choppy trajectory to me. It's a little bit inexpensive of a stock for me to think about selling premium. So I don't know. I wouldn't assume offhand that this does have a lot of premium to sell, though. Maybe I'm wrong. Maybe it does. But I think you would look something like this below 16. Yeah, even still, I don't know that I would. Yeah, if you buy Rocket Lab here, I agree, and it goes down, you're gonna be a bag holder, because I don't know that I would want to sell even if it went down, dude.
The premiums are juiced up on Rocket Lab. They're relatively better than normal, but it's one of those things where I think the market's looking for a neutron. They're looking for these core catalysts.
Yeah,
they're not here
yeah.
yet. Can we?
Did Chris buy his cruise lines yet?
I don't think he bought more. I think he's still holding. Carnival had a great earnings on Friday, though. They didn't say anything about the consumer being bad, which was good to me.
Who?
Carnival. They said this would be their best year ever. And then you've got, airlines saying, well, we think there's a demand issue. And then Carnival's like,
well, UAL said that, right? United. Yep. And it's come down, but like, look at this bounce, dude. What are you flying to come out here?
United.
See, so I think that if we should go long United just to wish Amit a little extra luck, because this chart looks like it's gonna want it. This might get real squeezy soon. Squeezy as in like velocity showing up, because that's a big decline, right? So like, does it deserve? Even this is a 42% decline. It's crazy.
Okay, a couple more rapid fires. SMCI.
I don't care about SMCI. Why do we want to look at it? You guys, it already made the move. It's not going. All right, SMCI is not going anywhere. Sell your calls, sell your puts, because you're all going to get burned. You want to hold your equity, fine, but it's very much in a holding pattern, right in this box. Can it get bouncy? Sure, up to like 50 and just to fake you out, absolutely. But this is not ready to do anything.
Well, after the 10K thing happened, that was the catalyst, but then NVIDIA tanked. So where does SMCI go? Like, what's the catalyst left?
It's where it goes. It goes right here.
Okay, can we do
honestly, I think this is like if anything, I would be short, quite frankly, but I'd rather be short closer to 50s. But this is such a weird chart. Like, yes, you have a higher high, you have a equal high. It's equal high, higher low, higher high, higher low. Can it go up here and then here? Yes. I don't want to trade something like that personally, or invest in something like that. That's crazy. Because that's like, this is like 30% in either direction quickly.
All right, Celsius.
All right, I don't think it's a short. I'm just, based on what I just did, is like maybe it goes a little bit higher, but I don't know that I want to be playing a whole lot. I'd still rather Dell. I don't own Celsius yet. I say yet, preface with yet. It's still at that same spot, right? It is higher than where I sold it at last time. He doesn't think I should
like Celsius.
Yeah. And this is, again, it's a big base. Here's what I said last time about Celsius, and I'll say it again, is that when a stock has that type of a downfall, and we're talking about $100 to $20, right? We're talking about a 80% decline, fall from grace. Can these things recover? Absolutely, they can. Look at Carvana. But let's look at Carvana. Not Carvana. See, let's look at Carvana. In exactly this kind of situation, when you're down 90% from the highs, like, can it recover? Absolutely. But the process of recovering from something like that and gaining the market's trust back, I'm telling you now, is not it's not a quick process. That's a two plus year base, right? So I firmly believe that that's probably what we're going to see on Celsius. Is at a certain point, like, you need to gain investors' trust back, and it's really hard to get behind this. If you were burned, if the market was burned at $90, yeah, I know it's up 30-40%, but how many times was Carvana up 30-40% in that same situation? I just think it needs to go sideways for like another year.
Okay, Micron. They had a good.
How are we picking all these sideways ass charts? This is not like, this is a box, dude. It's in the box. It's in the box. This actually, you have to have a fundamental thesis on this. I guess if you want to be long NVIDIA, you should probably be long Micron. But again, you can't be long Micron the same way that you're NVIDIA. I'll tell you now, because this is a commodity play. It's not like it has major like IP or anything like that. There's nothing really special about what Micron sells, except that it's required to be used. They don't have a special sauce catalyst that I know of. I may be wrong with that, but there you go. Does that make sense?
No, that makes a
So
lot of
I think that Micron will continue to trade at a bit of a discount, even though it's going to be a requirement in the AI movement. But again, because it's very much a commodity versus something like an NVIDIA.
SoFi.
SoFi's a long baby.
That's
So I bought this, but I think you're right back to the scene of the crime. $14, man. What a recovery.
Oh, it's at 14. Are we there already?
Oh, yeah. Well, no, 1380, close enough. 1389, close enough for government work. You're not going to be a penny pincher. I hope not. But you're basically there. So I'd like to see it hold over 13s, ideally. Can it come back down a little bit? Yeah, I think so. But again, cautiously optimistic across the board. For the equities that have been hit really hard, I want to see them all lock in a higher low in the very near term. Again, 40% downtrend. We don't usually get 40-50% like pullbacks, drawdowns in equities very often. It's a pretty rare thing, to be honest. And so to think that another one's going to come right around the corner after having one, I think is not something that you should be really scared of. Does that make sense? If we rally another 50% from here, then sure. But again, it doesn't happen that often in general.
Right. Okay, like 2 or 3 quick ones, and then we'll end it off with Bitcoin, and then I got to.
What time's your flight?
Flight's at 3, but I got to do a couple things before I take an Uber.
Do you get your cyber cab coming?
It's not a cyber cab. Oh, I'm getting my dad a Tesla. So,
I heard something about that. Yeah,
a new Model Y.
Found one.
There you go. Can we do? I don't think there's anything interesting with Grab, but can you look at Grab real quick because people are asking?
Yeah,
I think it's just flat right now.
Just so you guys know, this is how selfish he is.
No, it's not. I usually don't do Grab, but so many people are asking that.
But he did. No, it actually looks good.
I don't think there's any TA here. It's flat. It's like
there's TA here, dude. It's good. It's exactly
TA. What's the TA?
We talked about. You guys remember, it's not like I'm here with this guy every single week and we say the same thing most of the times. And finally he gets to the point where we said he needed to get to, and then he says, oh, there's no TA. I'm like, what's happening?
It fell to 4 on the market correction. Now
we
it's back
said
to
it needed to get over 467. Today it's got a full day basically trading over 467. You got the first close over, second close over. Give me 3 closes over and you're off to the races, baby.
I really hope that's right, but it was at 467 a month ago. It's like to me,
it's only the second so far.
To me, this one needs a fundamental catalyst.
If it holds, 3 daily closes over, and you should be good. But this is a little flag in the middle of a flag, so like, it is. See this,
dude? He's like Mozart. He's like finding all these arguments.
It's right here, dude. What are you talking about?
I don't believe this shit. I think they need a good earnings. That's all it is for Grab. I don't think it needs any.
It doesn't. Why? What do you think? So first of all, I was listening to
Grab
you guys last night. I love Robinhood, and I actually listen to this Robinhood Weekly, and I'm like, dude, I'm like, somebody tell the host that the audience is more bullish on Hood because the market is a forward-looking vehicle. The market doesn't care about what your earnings are today. They only care about the market always prices in 2+ years in advance, right? So what we should care about is the market going to anticipate that in 2 years Grab's going to go higher, right? And if so, it's going to happen now before actual earnings. And that's why you always see these earnings run ups and stuff like that.
I don't know if I always agree with that,
the actual earnings is going to solidify or invalidate. That's also what you can get. So if you do have earnings, I don't know when they are.
Okay, so let me hold you to this.
This is a big deal.
What is your short-term price target for Grab a month from now? What does the TA look like? It's
a month from now. I think you get your triple top.
That's what, $5, $5.50.
Yeah. You want it very specifically. You want it exact. He wants it exact.
I think that's actually reasonable. $5.50.
Exact to the penny. I'm gonna go ahead and say $5.18.
I feel like you're gonna be right about that. And you're gonna brag about this as soon as we get there. I know you, but yeah, I think that's
so. It's this move. And you're going to hit this order block exactly where they fell off, right? So is this tradable? I don't know, right? But you're going to run to this, and the same people that sold here, right? And here, and then you're going to have a little battle. What do? But if anybody bought in here and is stuck, they're not selling yet.
Yeah, I agree.
And it's just now getting over this area where they bought before. Which is where we are at this very moment, right? So even to this extent, these guys that sold, you actually, why this is important right here, right now, is like, where these guys sold right here, do they buy it back? And if these people that sold it and pushed it down 60 cents buy it back, they can push it right back up 60 cents.
Okay.
Okay.
That is fair. All right, last two, and then we'll do Bitcoin and we'll end it out. VRT, VST as a combo. If there's anything in the data center space you see for those two.
I'm just looking at energy real quick. I don't know if there's going to be a correlation here. Highly doubtful. This is completely sideways. So VRT. It's just hard for me to really get like excited about this one. They have earnings at the end of the month. The problem is that they just had earnings here, but when we got that DeepSeek meltdown over here, all of these companies had the opportunity to beat and raise guidance, but none of them raised guidance, as I understand it. I could be wrong. And so because of that, I think they're going to be a little bit stunted at the moment, but it is a good area. Again, using this, it's a good area of defense, like defending here. I say defending. It's on it. It's really trying. I would say 96. I would, just to be safe, I'd say 97.50. If you see it closing the day over 97.50, you could make a $20 move into the 119s, but not really before then. This could happen quickly, but that would be your trajectory if you get there. But that's, you're anticipating right now, because you could hit your head at 97.50 and just get right back down to 85s and hold and try to go for it again.
Okay, last equity.
I'm assuming VST is going to be very similar. Ooh, it's not. It is. It's a little ahead of that. So VST is ahead of VRT. It did exactly what I was talking about being cautious of. So it got up there, hit its head, and might be coming back down to like the 125s before it can make another run on it.
Okay, last equity, and then we'll do Bitcoin and Nubank.
I think you just hodl this. It's not going anywhere right now. It's taking a breather. It's not bearish. It's not bullish. It will be bullish if it's over 12. It'll be pretty bullish if it's over this. But in the meantime, you have this kind of like, this is setting up. So you want to see that base, really like trajectory here. It can come down to, what is that, 11s again, still be valid to the upside, and then do something like that.
And do you have any opinion on Oklo? Because that is an energy play as well.
No, dude, they just reported.
Yeah, I mean, they don't have any earnings, but the stock's up like
right, but they just reported. So
yeah,
it actually looks like the rest of energy. These are all looking good. Today is one of those days where if I was just taking this one day at a time today, I would have been short on something like this, but I can't assume that this is going to stay short near term either, because this is just the channel that it's in. It's very easy. Like, I don't want to take this kind of a trade short for that, because it could easily tomorrow be green and just be in that same exact channel. So this is kind of a no touch for me. Either you're short for a small little, what we would call scalp, like, or day trade one day from the highs to the lows. But if this is anything, wherever this closes, it's 27.65. As long as this is closing Friday's high, it's not going down, really. It's not going to be until it's below Friday's low of 26.15 that you could say, okay, Okla is going down. So from here, it would be either you missed your short at 30, but even if you took it at 30, you got to start covering now and not be short here, because it's not going lower unless it's below 26.15. So for now, this is done going lower in my estimation.
Okay. Bitcoin and MSTR to end us out. I mean, we've seen some pretty bullish price action that's actually helping Hoodie. We can't forget that. So can we go back to 100 and get Hood back to 60? Because if it goes to 100, we're going to 60.
Is that your price target for this event?
No, I don't know what's going to happen at this event. But I think if Bitcoin goes to 100, like Hood's easily surpassing the ranges that it's been stuck at.
Well, it's never that easy. It's never like 100. But very careful here. So again,
also don't be bearish on MicroStrategy. We got Romeo who has like millions of dollars in it in the chat. So say something nice for him, please. Jason's like, how do I piss this guy off now? What's the best way?
No. I'm so long Hood that I'm not. I'm also short MSTR as a hedge. As a hedge against my Hood, but I'm not adding shorts to my MSTR. I'm done. Right? If it goes higher, I just lose and you win. But that's fine because I got me a lot of Hood. But anyway, so Bitcoin's breakdown level was 91 or 90,000, just over 90,000 right in here, right? We hit this, got over, played a little ping pong, finally pressed down lower, are coming back up. There are two levels. I think actually we do break through this. So normal, like techs would probably tell you 90,000 and change is like call it a day. I'm going to say it's closer to 99s, and it's probably going to be because Amit said it might even get to breach your 100 before it comes back down. But this is the exact same setup as the rest of the market, which again, from the lows, even here, let's see, make it that's 20%. This would be 27, and I think it could still make it to 103. I've not been super bullish crypto for a long time. Like I would have added in this lows, like this mid 60s, but I don't need to. I'm not selling it, but I think you get up here to retest, not really this line, but I would move this up right into here. So where it broke down before is 95 to 2 and change, right? So right here, that is actually where I think you get into a little bit of trouble. 95 to 27. If you can get through there, you got a second line, 101 262. So I think you can get all the way up to, is it 101? It's actually a little bit higher. Geez, what is that 103? It's still that. I think I said this a long time ago when we were here. If it got up to 103, it might be short. So it's still at 103, 278.54, $103,278 spot 54 cents. Where I think you could go, but again, one stop at a time. I think these are your areas. So basically, what you do with these is that if you're watching the underlying asset, you want to see it. Okay, first stop just over 90,000. I want to see it hold 90,000, but we should get to 90,000. Second step, 95,000, just over 95,000. I'd like to see it hold 90,000. It can come back down and then potentially make another run. And then I'd like to see it hold 95 in order to get to 103. So this one step at a time kind of trajectory. Again, this is not a tomorrow it's going to be 200,000. That's not happening anymore unless some crazy tweet comes out. I just don't see it. My whole concern up in here was like, what does this new money do, right? Does the new money that were in the crypto ETFs, do they sell quickly because they just got in, or do they buy more? And I think they sold and then they bought it back again is what I'm looking at.
Okay, so then what does that mean for MicroStrategy?
MSTR is actually literally right at the spot. So it's weird. MSTR, when Bitcoin did well last time, MSTR did not do that well. It was like they were buying, but it wasn't really going through. MSTR is literally at the inflection point of where it broke down last time. He's not over it yet either. So Romeo's got a big deal level at $345.89. It's a huge deal. It got just barely there today, but that is the box that you need to get over. So you need to have for here now. I think that you can see it come back down in the 320s, honestly, and still be even below that, slightly below. We want to hold 300, but if you're bullish, you'd want to see this kind of trajectory to get back up into the 390s potentially. But until then, again, level to level, if your level was 250, then it needed to be 300 next. And then after 300, it was 330. And so after 330, then it's 390, but you got to get over this first.
So you're short, but you're not adding to your shorts.
Oh, bingo. Exactly. But I'm short because I'm also long a lot of hood, and it's my hedge. And I don't mind being short MSTR. And I'm short like through an ETF. So
okay.
I just did my last so my plan was to build as we got into this. It was my last entry yesterday, which was actually right here. And we went a little bit over.
Okay. So
yeah,
you're
it's there.
right now. You're not thinking it's super bearish, the price action.
No, I'm not thinking it's super bearish. Well, if it loses 320, then you're gonna go back in your. So this was that downtrend that it kind of broke right in here. If I extend it back and I go, yeah, this hit. I mean, at worst, it would be like 300s again, and then I would have to take a step back and be like, all right, well, I gotta remove some of my shorts if that happens, and then some of them, and then hold to 250 and go level to level. But it's not like I'm gonna buy a $0 put on this right now. No, dude.
Yeah.
Like in general, actually, can we do it this way? We get from all-time high. Yeah, I mean, that's your breakout, if you will. Then you're holding, you're right into this. A normal trajectory, normal. It's not a normal stock, but normally it would go sideways a little bit from here and then kind of create your base if it's going to go back. This is actually ideally what you want to do, but best of luck, my dude. It's a TBD still. Cautious.
All right. There we go. Cool. Guys, I know we have a lot of other tickers. I'm sorry. I haven't even packed yet, so I really got to get out of here.
You haven't packed?
I literally
can't hear Jules.
I should.
No,
I don't hear it. That's great. The kid was great, dude. He was a champ the whole time. He was awesome.
He's still over there hanging out.
This is Jason's Twitter for anyone who wants to check him out. I know a lot of you guys have questions on HIMS and all these other stocks. If you just tweet at him, he can't respond to every tweet, but he definitely is on Twitter and checks all of his notifications, so he'll be able to put some charts up there. And then his private stuff is in his Discord if you want to check that out on his links in his Twitter, and then his YouTube.
That's like my trades and stuff, but analysis and all that kind of stuff, we'll usually do all that out here. That's like I'm taking this now, so you see my trade log, if you will, and the other traders.
All right, good stuff, sir. We appreciate you. He hit me up last night. He was like, "You want to do the morning?" I was like, "Yes, let's do the morning."
Yes.
Got to get some time.
Well, because I ran out of time on my stream too, and I said, "Oh, we'll do technical Tuesday." And I was like, "I wonder if he's even going to do a close because he might be on the road."
Yeah.
But I think more of the story. Watch NVDA. I think that's your one that's not yet gone, that's got room and has not really started yet. It's looking actually good. So you're how many shares do you have?
850. I need to buy the final 150. Get it over with. And I'm like, I don't think I'm getting 104 again. So I'm like, maybe
104.
That was the absolute bottom 2 weeks ago.
Dude, if you saw even close to 115, you don't want it.
Yeah.
Like you don't want it. But yeah, it's been a slow mover. I think it's on the up and up. I'm long.
I agree.
I'm long. I'm now long on options also.
Wait, leaps? You bought options?
No, not leaps. I went to June. Did I go June or July?
What, 140 on June?
You're right around there.
All right, 140 by June. Jason's calling it. Let's see if
Hold
we
on.
can get there.
620.
June 20th.
Is that June?
Yeah. Yeah.
Yes. But I also bought equity at like under 110. AMD is no, by the way, AMD is not in a downtrend anymore. So what's happening to this market? I don't know.
And it's
But it's out of
outperforming
the
NVIDIA.
downtrend.
Yeah. All right, good stuff. Thank you, everybody. Appreciate it.
Love
Yeah.
Adios.
See you, Jason.
Peace.
I will get you guys all behind the scenes content and footage from the Hood event. Will be super fun. We'll be streaming with Tanner and Roy tomorrow. We'll still do the market open tomorrow as always. And yeah, the event starts at 9:30 Eastern tomorrow, 6:30 Pacific. So I'll be live tweeting it. And I have no idea. I really have no idea what they're going to show off. Like, I just hope it's some really cool shit. And if it is, hopefully the market reacts to that as well. And we'll see what Vlad's got cooking up for everybody. All right. Thank you, everybody. I will see you guys tomorrow on the market open. Bye, everyone. Have a good one.